Shall we start? Yes, very good morning to all of you. Yes, sir. Online, please give me confirmation about the audio and video clarity. Then directly we can start with the new chapter, that is DTAA.
ఎందుకు తెలుగు మాధ్యమాన్ని చూస్ చేసుకున్నారు?
Then directly we can start with the new chapter, that is DTAA.
ఎందుకు తెలుగు మాధ్యమాన్ని చూస్ చేసుకున్నారు?
Yes. So what is the new chapter now we are going to start, ma? DTAA. So what is the full form? Double Taxation Avoidance Agreement. Double Taxation Avoidance Agreement. So it is also forming part of international taxation only. Sir, how many marks we can expect from the Double Taxation Avoidance Agreement chapter? Okay, definitely one 7-mark question, that is practical question, you can get 7-mark practical question, and definitely they are going to give the one more 7-mark theory question. That is only important in this chapter. If you are covering only practical questions in this chapter, you are going to get only 7 marks. If you cover the theory, sir, theory means how many questions? Only hardly 3 to 4 concepts are there in this chapter. If you cover these 3 to 4 theory concepts, you are going to get one more 7 marks. And definitely one MCQ. If you have any doubt, you can check last attempt question papers also. Totally in this chapter itself, you can score 16 marks. Yes, sir. Always they are given the 16 marks from the DTAA chapter. So what are the concepts now we are going to learn? Just okay, this is a revision like that. First I will tell you what are the chapters we are going to cover. My continuation of assessment of various entities not there. If you want to continue, you can go with the regular classes. Okay, continuation means I can't continue. Okay, openly I am saying already I clearly told that assessment of various entities chapter is over. Transfer pricing, I need to upload it. I will upload it. Okay. But listen, if you are going with that all the concepts in a more number of hours, that is not correct. Assessment of various entities topic done. Non-resident also only one part only. That one part also I upload. Transfer pricing I have to upload. I will upload the remaining methods for computing ALP as well as thin capitalization, etc. Okay. Transfer pricing I will upload. No, I don't want to see this chapter. Okay. Next. Sir, what are the concepts or topics in this session I am going to cover? I will try to cover 100% of the concepts, but every model 1 or 2 questions will solve. For doing the questions, we have to go with the first 90A. What is that, ma? Unilateral relief. What is that, ma? Sorry. Bilateral relief. 90A is called as what, ma? Bilateral relief. So nothing but if there is an DTAA between the countries. What is a DTAA? Double tax avoidance agreement already is there between the two countries. Now we are going to provide the relief by using the section 90A. So this is a first area we have to discuss, and many methods are there. Every method related we are going to get the 1 or 2 questions. Next, very important, what is that, ma? Section 91. What is a 91? Unilateral. Ma, I am not at all saying anything, just listen. These are the areas now I want to cover in this chapter. Unilateral means there is no DTAA between the countries. Now, how we can provide the relief, ma? By using section 91. Okay. Sir, after completion of these 2 practical question you can get from this theory also you can get. Now, sir, what are the theory areas we are going to cover in this chapter? The main and very important, what is that? P. What is that? P? Permanent establishment. Another area, yes, you can get the, yes, that is what? Foreign tax credit. What is that? Foreign tax credit. Yes, foreign tax credit related, there is no section number in the act, but we have to take the rule number. What is the rule number we are going to take? 128 rule number. Rule number what? 128. Next, last, we'll discuss the models of DTA. Models of what? DTA. So these areas now we are going to cover in this session. Listen carefully. So these are the areas if you prepare. Yes, 7 mark practical question you will get. And this is also theory area. And these are also theory areas. Totally you will get one more theory question and you can solve MCQs also. Now we'll start the each and everything from the handwritten first. Basic point, please try to understood for doing the questions. In India, how we are going to tax? Based on the resident rule we are going to tax. What is the rule? Resident rule. Always in India, for taxation purposes, we'll check the which rule? Residential rule or resident rule. You know already in intermediate level itself how to calculate the residential status, you know. Yes, resident and ordinary resident. If you got a residential status as an what? ROR, resident and ordinary resident, then which incomes are taxable in India in your hands? Entire global income is taxable in your hands. What do you mean by the global income? Indian income plus foreign income. Entire global income is taxed in your hands in India. That is what global income means. Indian income plus foreign income. Sir, if you become the resident and ordinary, that is a tax treatment. Next what? If you are a non-resident, what is the tax treatment? Only Indian income is taxed in your hands. That means if you want to tax one person in India, what rule we are checking? Resident or non-resident only we are checking. So that's why which rule we are following? Resident rule. So now this is only example we are going to take for entire chapter understanding purposes. Listen carefully. What is that? Mr. X residential status? ROR. You have an Indian income 10 crore. Foreign income, which country? USA. How much? 2 crore. Indian income 10 crore and foreign income in USA country 2 crore. Now, how to tax that person in India based on which rule? Already you know, resident rule. We are following which rule? Resident rule. What is the residential status of Mr. X? ROR. So because of the ROR residential status, we are collecting the tax on which income? Global income. Can you calculate the global income here? 10 crore plus 2 crore. Tell me. 12 crore. So on the 12 crore in India, we will collect the tax. Then what about other country? The taxability in USA, they will collect the tax based on which rule? Source. Source rule means nothing but in that country you earn that income. In that country you earn that income. So that's why they will also collect the tax on how much? 2 crore. Because you earned how much amount in their country? 2 crore. So that's why what is that amount taxed in their country? 2. Now tell me, if you observe that on some income he paid tax in both the countries. What is that income taxed in the both the countries here? 2 crore. That is only doubly taxed income. Sir, if any income doubly taxed, that is not at all correct. Why? In future, he will not declare that income in both the countries also. He can avoid the tax also. He can avoid the tax also. Simply, he will undisclose everything in the future. Remember everything. This is an important point. Why double taxation will arise? One country will tax based on resident rule. Another country will tax based on what? Source. So that's why double taxation will arise. If any double taxation is there, what we have to do? We have to prevent the double taxation first. Before double taxation itself, we have to prevent it. Okay, if any double taxation already happened, what we have to do, ra? We have to avoid the what, ra? Double taxation. Prevent or avoid the what, ma? Double taxation. That purposes only we have an DTAA, double tax avoidance agreements. Remember, sir, what if, sir, if double taxation arises? So in next years, he will not at all disclose these things in the both the countries. So automatically the tax evasion simply, not avoidance, tax evasion will be done after the next years. Now understood at this point. Why double taxation will arise, ma? If one country taxing the income based on resident rule, one country taxing the income based on which rule, ma? Source rule, automatically we can get the double taxation. In India, can you tell me when we can get the double taxation, ma? Simply, if you are an ROR, in India, we can collect the tax on global income. Another country, already you paid the tax on which income, ma? Source rule, on the income which you earned in that country, already you paid the tax. Now understood, first of all? No. Now, for 5 minutes, you have to remember this flow. Flow means nothing but what are the chapter and what are the methods we have. All the things first you know, then one by one methods we will cover. If you don't know anything also, in these 4 hours, you will understood everything. And on paper, that means on screen, I will try to do some questions also. Okay. Now, please tell me, relief. Sir, if any double taxation is there, we are going to provide the what, relief. So now definitely Mr. X felt can some tax burden here. Now we want to provide the relief to the SSC. So how we can provide the relief? How we can provide the relief, that we can discuss now. First, between the countries, if DTAA is there, between the two countries, if double taxation avoidance agreement is there, what is the provision we have to check, ma? 90A. Section numbers, remember, 90A. When, if that agreement between the two countries are there, that means both the countries agreed, right? So that's why it is a bilateral relief through what, agreement. Bilateral relief through what, ma? Agreement. Now, if there is no DTAA between the countries, that is called as what, ma? Unilateral. Sir, in between USA and India, there is no agreement. Example only. There is no agreement. Now our country, that means Indian country point of view, we have to provide relief. That means single side only. So that's why unilateral relief. There is no DTAA. What is the section number, ma? 91. Okay. Sir, which type of questions most frequently they are given in exam, ma? Unilateral. Okay. 100 times if this question is there, 90 times always they are going to give the what, ma? Unilateral relief. What is that? Unilateral relief. Now, sir, bilateral relief also important. In recent times, they are going to give the bilateral relief, theory question as well as the practical also. Bilateral relief, what, ma? Theory question as well as practical question also. Shall we discuss, ma? First, bilateral relief we will concentrate. First, bilateral relief methods are broadly classified into 2 types. The first one is what, ma? Tax exemption method. Second one is what, ma? Tax credit method. Tax exemption method as well as what, ma? Tax credit method. First, we'll concentrate on the exemption method. Tax exemption method, that again classified into how many types? 2. One is full exemption. Second one is an exemption with a progression. What is that, ma? Tax exemption method further classified into what, ma? Full exemption. Second one, exemption with a what, progression. Shall we discuss these methods first? Yes. Listen. Tax exemption method. What is that? Tax exemption method. One is full exemption, another one is exemption with a progression. Simple, right? Sir. Class lo phone lo. Full exemption method now we'll discuss. Simple. What is that example? India. What is that example? We have an India. And the other country is what? USA. What is that income we have in India? 10 crore. What is that USA income? 2 crore. Between these two countries, there is an DTAA. That DTAA, in the DTAA, they written the method that is what? Tax exemption method. What is that method? Tax exemption method. So clearly they written tax exemption method. That too they written what? Full exemption. Now how the relief we can provide, we'll check it out. What is that? Full exemption method. How we can provide the relief, we can check it out. Bilateral relief or unilateral relief? Bilateral, because there is an DTA. Listen, in other way I will tell you entire chapter now. Simply, resident country. Can you tell me for which country we are a resident? Mr. X is an ROR to that Indian country, right? So nothing but we are give up our rights to collect the tax on what? Foreign income. Simply, yes, here we will collect the tax on how much? 10 crore only. We are giving up our rights to collect the tax on foreign income. Now, foreign country only have an exclusive right to collect the tax on that income. So now tell me, double taxation is prevented or not? Yes. Exemption means we are completely giving the exemption for how much amount? 2 crore. Full exemption. What is that? Full exemption. We are not going to collect any tax on foreign income. Which country gave up its right? Resident country gave up its right to collect the tax on foreign income. Which country have an exclusive right to collect the tax on such income? Source country. Please read these lines. In exam, you have to write it down these lines. Yes, please read. Resident country gave up its right to collect the tax on foreign income. Full exemption. Okay. Source country have an exclusive right to collect the tax on such income. If you written these lines, then only you will get marks. Don't change the words also. Foreign country. Yes, sir. Here we are not using the foreign country word also. Which country? Source country, resident country. Don't use the India and foreign, etc. Resident country, give up its rights. Next, source country have an exclusive right to collect the tax on such income. Understood, all of you? Now, we'll discuss the in exemption method only. In exemption method only, we have another one. What is that? Exemption with a what? Progression. Exemption with a what? Progression. So I will take one question. Along with that question only, I will tell you this total concept also. Shall we start this question? Yes. Please open question number. Question number 1 you can open. Now I will tell you. Please open question number 1. By using this question only, I will tell you exemption with a what? Progression concept. What is that? Exemption with a what? Progression concept. Shall we? Listen. Sri Anush is a resident and ordinary resident in India. His residential status is ROR. And having the following income details. Income from India, how much? 3,40,000. Income from foreign country, 2 lakh. How much? 2 lakh. investment in public provident fund, this is an eligible for deduction under which section ma? 80C. 80C. Now SSC followed the which regime ma? Please check. He opted out from default tax regime, means he is following the which regime ma? Normal. If you following the normal tax regime or old or optional, can he get the chapter 6A deductions ma? Yes. So that's why 80C he can take. Now between that India and USA, sorry, country chat, there is an agreement or not ma? Yes. Clearly between the two countries there is an agreement also. Now that agreement clearly saying that in that agreement they drafted which words? Listen. According to said agreement, income is taxable in which country ma? Where it is earned. Yes ma? Clearly they are saying income is taxable in that country where it is what ma? Earned. And next line, not in other country. That means in source country they will collect the tax on such income. In resident country it is not taxable. Sir, it is up to now what ma? Full exemption only. Up to now full exemption method. But they given, however, extra line. In other country means which country ma? Resident country. In other country means what ra? Resident country. Such income can be included for the purpose of what ma? Computation of what ra? Tax rate. Ma, this is only theory of exemption with the progression method. Okay. Next question I will read. Ra. Okay. Don't solve that next question. Just I will read the question. Okay. Ma, according to ADT, that means avoidance of double taxation ma, they can give it as ADT also, DTA also, agreement for avoidance of double taxation also, one and the same. What is that? One and the same. Now listen carefully. Here what lines they drafted ma? Clearly. Here. According to said agreement, income is taxable in the country where it is earned, not in other country. That means in source country that is taxable, in resident country that is not taxable. However, in other countries such income can be included for what purpose ma? Rate purpose. So what is the rate purpose? I will prove it. Shall we do that? Yes. Sir, many students are reading this question, but what is the method we are going to follow for giving the relief? They are not understanding that. Now, first question and second question, you can easily identify this method is nothing but what ma? Tax exemption method, within that exemption with the progression. So now I will solve this question on paper. In exam also, yes, always what they asked, please check ma. What is that? They are asking the computation of the total income and tax liability of so and so SSC. Okay. Now we can solve. Every question we have to start in fresh space. Now computation, yes ma, computation of total income, total income and tax liability of whom SSC ma? Anush for assessment year. Sir, why we are giving heading as an assessment year? Tax computation we are going to do in which year? Assessment year. If you want to write both the previous and assessment years, you can maintain, but most appropriately we have to give the heading in the form of assessment year only, because these computations we are doing in assessment year. So now the basic format, particulars and what ma? Amount. So now before solving this, you have to understood, sir, what is a method ma? Exemption with the progression. We are not going to levy the any tax on which income ma? Source country income, but we have to consider it for the rate purpose. So now we will consider it. Now what is that income details they given in the question ma? Please tell me. Yes, income from India, income from country jet. Yes ma, income from India and income from India. Next, income from which country? Country. That means we consider the both the Indian income and foreign income. Sir, maybe you haven't doubt. Samir. Tab charging ఎప్పట్లో Indian income plus what ma? Foreign income. So can you tell me Indian income amount ra? Sorry, 3,40,000 and 2 lakh. Sir, what you will get ma? What is that? Gross total income. Sir, gross total income we got ra. Sir, in exam like this at least you have to present ra. How you are presenting in an exam, that is up to you only. 5,40,000. Next ra. What is that? Chapter 6A deduction ma? 80C. How much? 20? 10 only. Okay. 10,000. What is that amount? You will get it as a net total income. Ma brief you have to write it down. Time constraint is there from my side. So I have to write it down in a shortcuts always. 5,30,000. Now I have to calculate the what is the rate we applied here. Ma, if I am not considering this, I am in which percentage of rate collection? 5%. Because up to 5 lakh, how much I can collect as tax ma? 5%. Because of this inclusion, we are in 20% slab, right? So we are increasing the rate right now. Ma, if I am excluding that, I can collect only tax on the 3,40,000 at the rate of 5%. And if I am included this income also, now I am collecting the tax with the rate of how much also ma? 20%. Why up to 5 lakh 5%, 5 lakh to 10 lakh 20%. Now please calculate the average tax rate in India. How to calculate? Remember, net total income. Yes ma, tax liability. First we have to calculate what ma? Tax liability. Please tell me tax liability. At the time of calculating tax liability, you will get it out, sir. We are exempting the foreign income, sir, but you are calculating tax. For rate purpose only we are calculating. After that we will remove it. So please calculate up to 2.5 lakh exempt, 2.5 lakh to 5 lakh 5%. Next, how much is there ma? 30,000 into what? 20% plus 4% health and education cess. Total how much? 19,000. Sorry? 19,000. So on that net total income, we calculated this tax. In India, please calculate the average tax rate in which country ma? India. How much you will get? 19,240 divided by 5,30,000 into 100. What is the rate? Sorry, 3.63%. Now listen, Now listen. By using the same rate, we have to provide the relief to country Z income. Because we consider this right, we increased the rate some extent. Now we have to provide the relief for the foreign income. Can you tell me what is a relief we can provide? What is a foreign income? 2 lakh. By using the same rate, whatever we collected, yes, by using that rate only, we can provide the relief. What is the relief, ma? Sorry? 7,260. Yes. Now, what is our? This is a tax liability before relief, ra. Now, after relief, what is a tax liability, ma? Tax liability after relief. How much? After relief, it is an 11,980. So now, here what we done, we included this for the purpose of computation of tax rate. By using the same tax rate, we provided the what ma? Relief. Now I will tell you one simple point. Here in this question, they given the one information, foreign tax. In foreign, what is the tax you paid at the what rate they given? In next question also, they given what is the rate or tax you paid in the foreign country. It is relevant or irrelevant? Irrelevant. Why? We are calculating the rate of tax in India by using the same rate only. We are providing what relief. In exemption with the progression method, whatever the tax you paid in other country, that is completely irrelevant. Okay, here we will calculate the rate by using the same rate only. We are going to provide the what relief. In exam, if they ask a theory question, what you have to write it on here? Can you tell me? Here, income from the source country. Income from which country source country is considered only by the resident country for what purpose rate computation purpose. After computing the rate by using the same rate only, we are going to provide what relief. Understood all of you? Sir, two methods done. In exam, if they are asking the theory question also, practical also, clearly you have to check which method related question they given. Okay, broadly, first method done. Exemption method. Within that exemption method, full exemption also we discussed. Exemption with the progression also we discussed. In this tax exemption method, whatever the rate you used for the payment of tax in the foreign country, how much you paid as a tax in that foreign country is relevant or irrelevant? Irrelevant. In India, we are exempting here fully. Here, we are calculating the rate. By using the same rate, we are going to provide the relief. Now, so second method is what tax credit method. What method? Tax credit method. In the tax credit method, first will concentrate on the direct credit method. What is that direct credit method. Second one indirect credit method we have. Third one special credit method we have. Credit method we have to start. Exemption method over credit method. Within the credit method again how many three. First one direct credit, indirect credit, special credit. Okay, for first we have to concentrate on the direct credit as well as what. So in the direct credit how many are there full credit, ordinary credit. Are full credit, ordinary, not half credit. Okay, many are writing there is full credit, after that full opposite word of credit. Like that there is no method. Full credit and ordinary credit we have. So next indirect credit method example is what underlying tax credit method. Special credit method example tax paying method. So now we have to discuss these four methods in the credit method. How many methods are there in credit method? Four. Full credit, ordinary credit, underlying credit, tax paying method. So I will take one question and I will discuss the full credit as well as ordinary credit totally by using that question only. Okay, shall we take? Yes, your past examination question only will take. I will take question number 5. I will take what question number 5. Shall we start? Shall we read? Okay. Please anyone can you give me calculator? నాకు వినిపించదు మీరు చెప్పేది. ఒకటి చాలు. అసలు ఎంత ఎగబెడతారా క్యాలిక్యులేటర్? చేయకూడదనేగా మీరు. Okay. Now, Ramesh is a resident of India, employed in X Limited. He went 3 months assignment to which country? Country. In India only he is doing work. But some months he traveled to which country? Countrywide. Salary income, total salary how much 18 lakh. In that some salary earned from which country? Country Y. How much? 6 lakh. In country Y, that amount is taxed at the rate of what 25%. without basic exemption limit. What do you mean by the without basic exemption limit? Ma? Flat rate. Okay. Now, what is the tax liability they are asking? Isn't resident and ordinary resident. Now they are asking tax liability under full credit method, under ordinary credit method. That means if we solve this question, we can understood the what is a full credit and what is a ordinary credit. But what is the rates he followed? 115 BAC. What are the rates he followed? 115 BAC. Nothing but default tax receipt. Shall we solve? Okay. So please give me the computation support. Now they asked the computation of total income, computation of what? Total income and tax liability of whom? Ramesh, Mr. Ramesh, for assessment year 2026-27. Just here I will maintain the columns, particulars. Tell me first. India, he earned some amount in where? India. And as well as which country? Country. Country why? Sir, here which income? Total salary. Sir, total salary they given clearly after removing all the deductions and etc. Now we'll take that as an total income. So what is a total income? Only the salary income. In India, how much will be taxed? That means income from salary, that is only in India, global income is required to tax. Clearly they given total salary itself 18. Okay. In that, how much from foreign? Okay, if you observe, in India he earned how much? 12. In foreign 6. But in India, how much is taxable? Global income is taxable. So that's why how much I need to write it on here? 18 lakh. Here I have to write. Sir, many are written here 12 lakh. That is wrong. Why ma? Here global income will be taxable. What is that? Global income will be taxable. That means Indian income plus foreign income is taxable here. Now I will calculate the what is the rates we have to follow also. Here 115 BAC. In that country also we know tax rate is how much? At the rate of 20%. Sorry, 25%. What is the rate? 25%. So now we'll calculate the tax liability. The tax liability computation stepwise you have to show. Tax liability in that country 6 lakh into 25%, that is an 1,50,000. Easily we can calculate because that is an flat rate. But now here we have to calculate by using the 0 to 4 lakh. What is the rate? Nil. And tax liability also you will get what? Nil. So 4 lakh to 8 lakh, 5% slab we have to follow. How much? 20,000. Yes, 8 lakh to 12 lakh. What is that? 10%. What is that? 40,000. Next 12 lakh to 16 lakh. What is that? 15%. That is also 60,000. Next 16 lakh to how much? 18 lakh. 2 lakh only there. Yes, that's why 20%. How much? 40. 2 lakh into 20%. Correct? Now total salary means after removing everything only this income will be there. Okay, total salary means taxable salary only they given after computing everything under salaries head only they given. So don't reduce again. If they are given the yes like salary received before computation, then you can reduce it. They given total salary yes for that year means nothing but what? After reducing the deductions only they given. Okay, now listen, what is that amount totally we can get? 20,000 plus, okay, total 1 lakh. So 1,60,000 after adding the health and education says how much ma? 1,66,000. How much? 1,66,400. In India, this is a tax liability. In foreign tax liability, we know. Now we have to calculate the yes ma. What ma? First one, full credit. We have to solve by using the what ma? Full credit method. Listen here itself. I will tell you the theory. Without theory, you can't write the theory question answer. Already we discussed the full exemption method means and exemption with the progression. Now we are going to discuss the full credit and ordinary credit. Ma full credit now we are solving ma. Tax liability before relief. What is that? Tax liability before relief. Can you calculate in India what is a tax liability before relief ma? 1,66,400. So less credit, how much we can take ma? Full credit means whatever the tax you paid in the source country, that entire amount now you can take it as a credit in resident country. Now which country is giving the credit ma? Now which country is giving the credit? All of you please tell me. Resident country is giving the credit towards the taxes paid in which country? Source country. Resident country means nothing but India. Here giving the credit whatever the taxes you paid in the which country ma? Foreign country. Not, don't use foreign country. Which country ma? Source country. Okay, tell me. Full credit means entire amount we can take it as what ma? Credit. How much ma? 1,50,000. Now before relief tax liability we know. Then we have to calculate the tax liability after relief. What is that? After relief. Tell me ra. 16,000. Understood? So simple. Full credit means resident country will give the credit towards the taxes whatever we paid in source country. Okay. So now we can discuss the theory. What is that? Which method ma? Full credit. So full credit means nothing but whatever the tax you paid in the source country, that allowed as a credit against the tax payable in which country? Resident country. Here you have to remember which country is giving the credit? Resident country. What amount? Whatever the taxes you paid in source country. Paka, full credit over. Now we are in the which method ma? No. First tax credit method. Within that first one is what ma? Direct credit. Within that we haven't two. Full credit is over. Now we have to discuss the ordinary credit. I will explain you the question. Then after we can back and we can discuss the theory. Sir, connectivity ostunda. If you understood these lines, then only you can write theory question. Okay. Now ordinary credit will continue with this only. What is that ma? What is that ma? Ordinary credit method. What is that ma? Ordinary credit method. Sir, okay, even though if you felt it as a slow, but if you understood the concept, new questions also you can do. So one model, one question I will do it. And 91 I will do 5 or 6, no problem. 91 important. That's why we'll discuss 5 or 6 questions. Next we will go with the theory concepts also. Easily we can complete before 1 after taking breaks also. Listen first. Okay, ordinary credit, the same ma. Tax liability before relief. In India, what is the tax liability before relief ma? 1,66,000. 1,66,400. Now I will tell you the simple thing. Ma, in India, how much taxed? 18 lakh taxed. If 18 lakh taxed, how much tax we collected ma? 1,66,400. Okay. In foreign, you paid tax on 6 lakhs. How much ma? 1,50,000. But I don't want to give this 1,50,000 as a credit. In full credit, you've taken this amount as a credit directly. But in ordinary credit, they are not giving the entire amount as a credit. They are restricting this credit with the, suppose if the 6 lakh taxed in India how much we can collect, that amount only we can give it as a credit. I will tell you, Why I need to give the full credit, whatever you paid in which country, ma? Source country. Full credit is giving the yes entire amount. But in ordinary credit, that 1,50,000 is restricted with the, suppose if the 6 lakh taxed in India, how much tax we can collect? We have to check. Now, clearly I will tell you, less water relief. Less water relief. They are saying 1,50,000 is restricted with the next one. I will tell you. Ma, 6 lakh if taxed in India, how much we can collect as an tax? We have to check. 6 lakh related in foreign, you paid 1,50,000. But in India, how much you have to pay on that 6 lakh? We have to check. Simple, cross multiplication we can do. Ma, 18 lakh related. Yes, ma. How much we paid in India? 1,66,400. If 6 lakh taxed in India, how much we can collect? Simply, yes, please do the cross multiplication also. Yes, ma. 1,66,400 related to how much, ma? 18 lakh. If the same amount, same rate, so simply here we are calculating the what rate. That rate we are applying on how much, ma? 6 lakh. Tell me how much? 1,66,400 divided by 18 lakh into, yes, ma, 6 lakh. How much, 55,467. That is 55,467. Sir, why I need to give the full credit? If that 6 lakh was taxed in India, how much I can collect the tax on that 6 lakh? 55,467, right? Now we can give the relief, whichever is lower. How much, 55,000 minus, if you done, how much you will get, 1,66,400 minus 55,467, 1,10,933. Ma, please compare your answer. 16,400 ordinary, sorry, full credit related answer. Ordinary credit after taking that 1,10,933. Ma, understood? Simply here I don't want to give the full amount of credit. That full amount of credit is restricted or increased? Restricted with the, suppose if the foreign income taxed in India, how much we are going to pay the tax? In foreign you paid 1,50,000, that okay. But in India, same amount taxed. What is the tax we can collect on 6 lakh, ma? 55,000. We are restricting 1,50,000 with the what, ma? 55,467. Now shall we discuss theory, Yes. Resident country here allowing the credit. Here also, which country always will give the credit, resident country. Whatever the tax you paid in the source country, up to this, it is also which credit, full credit. But we are restricting that credit. Income attributable to that. Attributable means what, ma? Simply, whatever that income is there, how much we can collect as a tax in India on such income. In resident country, how much income taxable? Please calculate. So simply, foreign income, if was taxed in India, how much we can collect and that amount, and how much you paid as a foreign tax? Yes, whichever is what, lower. How many methods are over, ma? 4 methods. So not 4, we can't call it as 4. First exemption method is one part. Within that exemption, full exemption, exemption with the progression. Next, we started the credit. In the direct credit, 2 methods are over. What are that, ma? Full credit, ordinary credit. Full credit, ordinary credit. Now we have to discuss the next one is what, ma? Tax sparing method will start. What is that method I will start, ma? Sparing method. Ma, underlying tax credit method, you can't get it as a question, but I will tell you. But the most probably will get the tax sparing method in our exam also. So that's why first I will give the preference to the sparing method. Later, last method we'll discuss the what underlying tax credit method. What is that? Underlying tax credit method. Shall we start? Yes. Sparing method, I will tell you along with the example. First, I will take the example. This is only our study material question, and in our workbook also we have this question. But we'll discuss automatically theory also after this exam. What is the method ma? Sparing. Okay. Listen. What is that company ma? A Limited, parent company. Located in which country ra? A Limited is a parent company located in which country? Country X. And that having the branch in which country ma? Y. That means country X also, country Y also. Which company is doing the business ma? A Limited. Directly they are doing the business in country X. By using the branch they are doing business in country Y. So now branch and the profit. That means this profit end in which country? Country Y. Branch located in which country ma? Y. So that's why this income and in which country? Country Y. Next, country X is taxing the residents on which income ra? Global income at the rate of 30%. That means, now can you tell me in country X this amount is taxed or not? Yes, because global income we have to tax. You are a resident in this country, parent company is resident in this country. Because of this residential status, how much income is taxed? Global income. That means this 10 lakh taxed in country X also, this 10 lakh taxed in country Y also. This country is taxing based on which rule ra? Resident rule. This country is taxing based on which rule ra? Source rule. Now, in which okay, in country X tax rate how much ma? 30. In country Y tax rate ra? Ma? 25%. Now, important line ra? Listen, however, to provide the economic development promotion like SEZ. Sir, if you started the business in SEZ, what we will give ma? Simply benefits of tax. That means first 5 years no need to pay the tax. So next 5 years some benefit. In the same way, country Y also providing the benefit. Yes, country Y not levying any tax. Uma, country Y is not at all levying any tax. In which country? Y. That means now in country Y, what is the tax liability present? 0. If you started the business in that location, 0. Otherwise, generally, what is that ma? 25. Now I will tell you one concept ma. Generally, tax law saying that 25. They are modifying the tax laws and they are given the benefit to the promotion of their businesses in their country. What is the tax they are levying? 0%. Now, what is the DTA between these two countries, country X and country Y? Sparing method. In that agreement, they return which method? Sparing method. Now, compute the tax sparing if that branch operated in where ma? So, simply they are asking tax liability computation. If the branch operating in which area ma? SEZ area. So, branch operated in that country Y in SEZ area. Now, what is the tax liability? 0. Because no need to pay any tax if you operated the business in SEZ area. Now, they are asking tax liability. Now, I will give the tax liability computation heading. Parent company and branch ma. Parent company located in country X. Branch located in country Y. Country X tax rate 30%. Country Y tax rate 25. Now, what is the total income ma? 10 lakh and 10 lakh. Many are asking, sir, in country Y only we earn 10 lakh, sir. Why you written here? Ma, remember, clearly they said, what is that income taxed in country X? Global income. That means branch income also now taxed in which country? Y. Sorry, country X. Next, ma, tax liability before relief. Simply apply these tax rates and tell me. Here you have to pick 0. Why? We are not collecting any tax because This company operated in which area, ma? SEZ area. If that is operated in non-SEZ area, what is the tax liability? 25%, that is 2,50,000 you will get. Next, before relief, that one. Sparing method is saying that even though you are not paying any tax in source country, please deem it to be treated as paid. That amount you can get it as what? Credit. Sparing, simply, even though you are not paying any tax in source country. Can you tell me how much tax we paid in source country? Nil only. We are not paid anything. But please assume, deem it to be already paid, and please take that amount as a credit. Okay, tell me, even though you are not paid anything also, but assume that already paid and please take it as a credit. Sorry, this benefit for whom? SSEs. Even though you are not paying tax in that country, you are going to get the credit here. You are not paid, but you are getting the credit. It is obviously benefit to whom? SSEs. So nothing but in country Y, yes ma, zero tax you paid, but now you can take the credit here. How much ma? 50,000. So from 3 lakh, how much credit you got? 2,50,000. How much tax payable? 50,000. Now please read the sparing method related theory. Read and tell me. Which country is giving the credit ma? Resident country. Allows the credit for actually paid tax or deemed to be treated as paid? Deemed to be treated as paid. That means deeming to be treated as tax paid on that income. Can you tell me? Deemed tax paid on that income in source country. Ma, if you observe in this theory, I am not at all used India and foreign country. I am using always resident source. Resident source. That income is not taxable in source country. Zero only. But deeming to be treated as already we paid tax, that amount only we can get it as what? Credit. Understood? Ma, understood sparing method? Yes. Now, if sparing method is done, please listen. What is that next method we are going to discuss? And last method in section 90 era, underlying tax credit. Right? All of you. ఏమన్నా ఒక్క ముక్కన గుర్తుందరా ఈ మెథడ్స్? ఏమన్నా ఇప్పుడు దాకా మాట్లాడి గుర్తున్నాయా? సో నౌ ఐ విల్ ఆస్క్, యూ కెన్ టెల్ మీ. Because in exam, they will ask entire reliefs as a theory question for 7 marks. Okay, first you have to write it down. The reliefs are classified into bilater, unilateral. First we'll discuss the bilater. Bilater first, yes ma, what are the exemption method, credit method. First we'll concentrate on exemption method. How many? Full exemption, exemption with progression. Full exemption means resident country give up its right to collect the tax on foreign income. Source country have an exclusive right to collect the tax on such income. Over. Second one, what is that? Exemption with progression. Sir, resident country is given the exemption to that income and in source country, but we can consider such income only for the purpose of tax rate. After computing the rate, by using the same rate, we are going to provide the relief. Here, in exemption method, in foreign, how much tax you paid, at what rate you paid, that don't want to consider. Clear? Next, credit method. Credit method again classified into 3. The first one, direct credit method. Direct credit method again into 2. Full credit, ordinary credit. Full credit means whatever the taxes you paid in source country, that is allowed as a credit in resident country. Next, ordinary credit. Ordinary credit means same concept. In source country, whatever tax you paid, that is allowed as an credit in resident country, but that is restricted with if the same income taxed in India, how much we can collect the tax in resident country. The restriction will be there. Full credit we are not given in the ordinary credit. Next we discuss the special credit method. What is that? Sparing. Sparing means even though you are not paying the tax in source country, but we are deeming to be treated as paid and we can give it as a credit in resident country. Clear? Now the last one we can discuss now, underlying tax credit method. What is that? Underlying tax credit method. So before going to that underlying tax credit method, I want to tell you one MCQ point. Then after we can start. Okay, sir, whatever example we discussed, Mr. X having the 10 crores income in India and 2 crores income in USA. Now, based on resident rule, in India, how much tax? 12 crore. In foreign, how much tax based on source? 2 crore. Here, what is a doubly taxed income? 2 crore. So that type of double taxation is called as an judicial double taxation. The type of taxation is called as what, ma? Judicial double taxation. Okay. Sir, why it is judicial? Two or more countries levying the, can you tell me two or more means nothing but in our example who are India, USA. India and USA. Two or more countries levy the taxes on same income. What is the same income? 2 crore. In the hands of same person. Who is the same person? X. Okay. That means same person getting taxed twice in two or more countries on same income. That is called as what, ma? Judicial double taxation. But now we have another double taxation. What is that? Economic double taxation. Listen carefully. If you understood this, one MCQ in your hand only. Okay. In order to understood this, we have to read this example. Okay. Ma, Indian company who invested in Indian company, ma, non-residents are invested completely. Indian company earns profit how much, ma? 1 crore. Already in India we paid the tax on 1 crore. Because your income is 1 crore in India, on that 1 crore we have to pay the tax. After payment of the tax, we distributed this 1 crore entirely as a dividend to whom? Non-residents. So totally the foreign investments only there in our company. We give an entire amount of profit also after paying the taxes and what? Dividend. Now tell me, dividends is taxable in the hands of shareholder under income from other source. In USA, how much tax? In their hands, in their country also, they have to pay the what, ma? Tax. Now, the same income in India taxed once, in foreign also taxed one, but in the hands of same person, different person, different person. Double taxation happened in the hands of same person, judicial. Double taxation happened in the hands of different person, that is called as what, ma? Economic double taxation. For better understanding, economic double taxation example, company distributing the dividend. Company already paid the tax in India. If that is distributed to non-resident, again they have to pay the tax on the dividend income in foreign. That means source country. Okay. Listen, business profits, dividends are taxed in two different countries. Listen, ra. Same income taxed in 2 or more. What is the same income? 1 crore. That is dividend amount taxed in India, USA. But in the hands of different taxpayers are same. In the hands of different. One time in the hands of company, another country in the hands of whom? Shareholder. Understood a difference between the purely if judicial double taxation is there, how we can give the relief? We have an DTAA. If agreement is there, we have to follow section 90 or what, 90A. If agreement is there, we can follow 90A. Means what? Bilateral relief. If there is no agreement, we have to follow the unilateral relief. What is that, ma? Unilateral. What section, ma? 91. Which section, ma? 91. Next, ma. Then how we can provide the relief to the economic double taxation? How we are going to provide the relief to the economic double taxation? Can you tell me, ma? Same, ma. Mutual agreement procedure. Nothing but that is also DTAA only. But if they given the option like mutual agreement procedure, you have to click that only. If they given DTA also, you can accept that as an DTA. But both the options are given, you have to go with the what, ma? Mutual agreement procedure. we can give the relief for the what ma? Economic double taxation. Understood? Sir, nothing but the mutually agreed procedure, nothing but that is also we can call similarly as an what ma? DTAA. But economic double taxation related relief we can provide by using the mutual agreement procedure, that is only what ma. So understood first. Sir, there is an MCQ also in our MQP's past. Yes, difference between the judicial double taxation and economic double taxation important for MCQs. Next, we are going to start the yes ma last method, indirect tax credit method example. What is that ma? Indirect tax credit method example. What is that? Underlying tax credit method. What is that? Underlying tax credit method. Now we'll discuss this example for understanding the underlying tax credit method. Samir, water now. Next. Example number 5. Sir, why this example ma? For understanding the underlying tax credit. But pakka they will not give this question directly. They will not give this question directly, but listen carefully. Conceptually we will discuss and we will ignore now. Okay. A Limited located in which country ma? X. It has a subsidiary. A Limited is which company? Parent company. And B Limited is which company ma? Subsidiary company. Subsidiary company located in which country? Y. Here one important point. Once some students asked the doubt also. Sir, here I think in sparing method we discussed this question, example number 4. It is our workbook question also. But what is a common doubt many students asked? Sir, why you are not added the education cess, sir? We calculated what same flat rate we applied, but we are not adding any health and education cess because this is not an India, country X, country Y. So that's why how we can apply the education cess other countries, just example purpose they given. If they are given India and the company rate is 30%, after that you can add health and education cess. But in this example, why we are not added the cess and etc. Because country X, country Y, not India. Okay. Next, here we can discuss the example related to underlying tax credit. Listen. Okay. Sir, B Limited earns the profit. Whom B Limited means? Subsidiary. Subsidiary earns the profit how much ma? 10 lakh. Out of that they paid dividend to A Limited how much ma? 1 lakh. Remember, B Limited earns the profit. If B Limited earns the profit, they have to distribute to their investor. Who are the investor in B Limited? A only, parent company invested in subsidiary. Now subsidiary is given the dividend to holding how much ma? 1 lakh. Other income of A Limited how much 11 lakh. Now other income, dividend income, totally how much income is there in the hands of A ma? 12 lakh. Dividend withholding tax rate. Please read this line and tell me what is a dividend withholding tax rate? What do you mean by the dividend withholding tax rate? TDS. Okay. While paying the dividend to that holding company in that country, yes ma, why? What is the TDS deducted ma? 15%. So what is the tax rate in country Y? What is the tax rate in country X also given? Clearly in this question, what is the relief between the two countries ma? Tax credit method, that too underlying tax credit method. For your understanding purposes only, now we'll take this. Okay, A is located in which country ma? Sorry. A located in which country ma? Country X. B located in which country, ma? B limited, right? B limited only. Okay. It is an holding and it is an subsidiary. How you know? Okay. Holding company, yes, ma, invested in the subsidiary. How much invested? They given any details? No. Now, because of this investment, they given the dividend. Yes, ma, they given the dividend. So now practically how much dividend they will give, ma? Yes, ma, simply net amount only they will pay. Yes, ma, net amount only they will pay. They will deduct the TDS on the dividend. What is that? 1 lakh TDS, right? What is the TDS, ma? 1 lakh. On that 1 lakh, how much we held, ma? 15%. Simply, we held the 15,000 and we given only how much, ma? 85,000. But, yes, ma, they have an other income. Yes, ma, what is that other income they have, ma? Ma? 11 lakh. And this dividend income also they are earning. Remember, while calculating the total income, in their hands they have to show the gross amount or net amount. Gross amount, they will show how much, ma? 1 lakh. They will show how much, ma? 1 lakh. But first, yes, tell me one more important point. They paid dividend, right? From which profits they given the dividend, ma? How much profit of an a B limited we have? Ma? 10 lakh. So, this 10 lakh is, now I will call it as an underlying profit. So, underlying means from which profits we paid the dividend. Underlying what, ma? Profit. On this only, out of this only we paid what, ma? Dividend. Now we'll calculate the tax liability in the both the countries. As one is A limited, another one is what, B limited. Yes, which country, ma? Country X, country Y. Country X, country Y. Okay, tax rate also please tell me, ma. They given tax rates also. Country Y is 25%. Country X is, ma? Listen carefully. What is a total income means? Please tell me. In country X, what is the total income, ma? 12 lakh. Country X, how much, ma? 12 lakh. In country Y, how much income, ra? Country Y, how much income? Profit only. How much, ma? 10 lakh. How much, ma? 10 lakh. Tell me, what is a tax liability? What is a tax liability? How much, ma? 3 lakh. Here? Sorry, 10 lakh. 10 lakh, right? How much, ma? 2 lakh 50,000. Ma, here we can take the credit. What are the credits we can take? So this is closed as of now because in that country, sir, they are resident in this country. We can take the credit related to TDS. How much already I paid as a tax in that country, ma? Sir, simply this 11 lakh plus what? 1 lakh, right? This 1 lakh already taxed in that country. How much tax we paid? 15. So now doubly taxed, right? So now you can take the credit of that what, ma? TDS. Because 1 lakh related, I am paying tax in India. 1 lakh related, already I paid tax in which country? Country Y. Now I can get the TDS credit. How much, ra? Now another credit important, underlying tax credit. This is a normally we taken credit, ra. Now underlying tax credit method means we can get the credit with respect to the taxes paid on underlying profit. Can you tell me how much tax you paid on underlying profit, ma? 2,50,000. That also you can take it as a credit under underlying tax credit method. What is that? 2,50,000. How much, sir? Finally, Huh? 95? 95,000. Again I will say, remember, yes ma, what this method clearly saying that credit allowed to resident. Can you tell me who is a resident in our question, ra? A Limited is a resident. Not only with respect to the taxes withheld on dividend income. What is the dividend income related taxes withheld ma? 15,000. But also, not only with respect to this, but also for taxes paid on what ma? Underlying profit. What is that underlying profit? Out of which we paid the dividend. Out of which we paid the dividend by which company ra? In which jurisdiction? Overseas jurisdiction. Sir, we can get the TDS amount as a credit. Not only TDS amount, but also we can get the credit for the taxes taxes paid on what ma? Underlying profit. Can you tell me what is that underlying profit? 10 lakh. From this only we paid what ma? Dividend. So how much tax we paid on 10 lakh? 2 lakh 50. That also you can take it as what ma? Credit. But remember, this method is not applicable in all cases. If substantial shareholding requirement met, that means in one company, we are only the shareholder in majority percentage. Yes, in that cases only, we can get this underlying tax credit. Sir, this is popular in some countries only. Example, Australia. Sir, in Australia, we invested in Australian company, 90% of shareholding we only invested. Now, definitely, upon that time, automatically double taxation will arise. Which double taxation will arise? Economic double taxation will arise. Now, if I invested in one company, yes sir, in substantially, automatically, yes sir, after company acquiring the profit, company will pay the tax. Then after, if they are distributing as a dividend, shareholder also will pay the tax. In one country, that is taxed as a business profit. In another country, that is taxed as a what? Dividend. So that's why in order to remove this type of economic double taxation, we have an underlying tax credit method also. Remember, this method is popular in some countries only. Whenever if you are invested substantially in that companies are located in such countries, then you will get this method. Yes, if you want to read this entirely, yes, I clearly given the underlying tax credit method related. Yes, sir. The benefit of underlying tax credit is available subject to certain conditions like what ma? Percentage of shareholding, threshold of shareholding. India now have an underlying tax credit benefits DTAs with the which countries? Australia, Japan, Mauritius, USA, UK. So it is not so popular in all other countries. But whenever you have a percentage of shareholding like 60 or 70 in another country, then after earning the income in that country, that is taxed. Again, if they are given the dividend, in our hands, again that is taxed as a dividend. It is simply which taxation? Economic double taxation. In order to remove that economic double taxation, we have an what? Map. Simply that is also what? Similar to. Understood? So, completely we discussed the section 90. Now we'll start the section 90. Now, many are asking this, sir. You told 1990A, sir. But what is the differentiation between 1990A? Now I will tell you within 1 minute. Then after we can discuss the 91 section. What is the difference between 1990A? Listen. Section 90. DTAA between the India and USA. If this DTAA entered by the Indian government with the USA government, the DTAA governed under section 90. India and USA having the DTAA. What is the DTAA? Double Taxation Avoidance Agreement. But this double taxation avoidance agreement entered between the countries by using the specified association. Example, Bankers Bank in India is nothing but RBI. The same banking, yes, jurisdiction, in that USA jurisdiction, nothing but the whatever the bankers bank or the major bank in USA, if both the specified associations are entered into the DTAA, that is which section 90. Remember, if governments are entered into agreement between the two countries, that is an 90. If specified associations are entered into agreement, what is that specified association is entered into agreement, that is what 90. So understood 1990. Sir, anything also there is an DTAA, which relief? Bilateral relief. How many bilateral relief methods are there also, each and every method we discussed. Now we can make a move on towards the section 91 relief. There is no DTAA. Sir, between the countries, if there is no double taxation avoidance agreement, now we are going to provide the relief under section 91. Simply from Indian country side, we can go and we can give the relief. There is no other country consent here. Sir, in last exam, they given the one MCQ. There is no DTAA between the countries. Now, we can provide the relief or not? Yes, even though there is no DTAA also, from Indian country point of view, there is no consent is required from other country. We can provide the relief by using the method given in which section 91. Shall we discuss the 91? Yes. What is that? Unilateral relief 91. There is no DTAA. Conditions. If the 4 conditions are satisfied, please take the relief under section 91. Otherwise, you can't. 4 conditions. First one, SSE must be resident in India. Resident means indirectly they are saying what? Resident and ordinary resident. What is that? Resident and ordinary resident. For that resident and ordinary resident, they have in which income? Foreign income. Income derived from the foreign country. Now, also you paid the tax on that what? Foreign income in the foreign country. Now what will happen? Double taxation will happen. Because foreign income already taxed in foreign. And you are in resident and ordinary resident. In India, you have to pay the tax on which income? Global income. Now double taxation arises or not? Yes. If double taxation is there, you have to provide the relief. If DTAA is there, we have to go with the section 90A. Here there is no DTAA. So that's why we have to provide the relief under section what? 91. Remember, in exam, if you want to give the better presentation, after doing the question 91 related method, after that you can put the note point and we can write these conditions also. What are the condition? Resident and ordinary resident. Second one, there is a foreign income and the foreign income related tax also we paid. Between the two countries, there is no DTAA. So now, how to calculate the relief under section 91? Sir, I will tell you the steps. Indirectly, we can use these steps in the question solving. Indirectly, we can use this steps in the question solving, but we will not give as a heading like step 1, step 2, step 3. The same methodology we will follow, but we will calculate generally, but we don't want to give the name as in step 1, step 2, step 3, etc. So, shall we discuss the steps first? Yes, first step is what? Please read. Computation of net total income. In India, we have to calculate the net total income for the resident and ordinary resident. So, you having the which income? Foreign income, Indian income. So, please calculate net total income. What do you mean by the net total income? Indian income plus foreign income, gross total income. Please reduce the chapter 6 year deduction. Now, you will get what? Net total income. So, definitely, in this question, they will give the SSC residential status as an what? ROR. What is the reason why they are going to give the residential status as an ROR? Then only we can solve the 91 with relief. So you having the foreign income also, Indian income also. So please calculate the gross total income combining these two. Reduce the chapter 6A reduction. You will get. Step 2, please tell me that. What is the step 2? Gross tax. Sir, please calculate the tax on the net total income. Why we are using the gross tax? Simply, we can take this some credits. What are the credits we can remove? Before claiming these credits, generally, if any taxes already you paid during the previous year in the form of TDS, TCS, advance tax, if any MAT or AMT credit is available, or self-assessment tax, if you paid anything, we can reduce it from the gross tax, right? Sorry, we can reduce it from the tax liability. But we are not going to reduce, that's why it is called as what? Gross tax. Simply from the gross tax, if you reduce it, these credits, you will get what? Net tax. But we are not removing any credits. But please add what? Surcharge and health and education cess. Remember, on this, please calculate tax. Tax includes income tax, surcharge, health and education cess. Please don't remove the credits. If available also, don't remove. That is called as what? Gross tax. From this gross tax, if you remove the credits, you will get what? Net tax. But what we have to calculate? Gross tax. Step 3, Indian average tax rate. What is that? Indian average tax rate. Gross tax divided by net total income into 100. Gross tax divided by net total income into 100. In the same way, please calculate the average tax rate in the foreign country. Please calculate average tax rate in which country? Foreign country. So, sir, some cases they will give directly percentage in the question. If they are not given, foreign income related tax divided by foreign income into what? 100. You can calculate the Indian average tax rate, foreign average tax rate. Suppose here you have in 20, here 25, whichever is lower you can take. What is that? Lower. Can you tell me the lower of the foreign tax rate and Indian tax rate how much? 20%. How much? By using this, yes that rate we have to give the relief. Many students are thinking relief should be provided on foreign income. No. Doubly taxed foreign income. We have to provide the relief on which income? Doubly taxed foreign income. We have to provide the relief only on what? Doubly taxed foreign income. In both the countries, how much is tax? That is only called as what? Doubly taxed foreign income. In our basic example, in both the countries, how much is doubly taxed? 2 crore. So now doubly taxed foreign income is how much? 2 crore. So that type of thinking you have to maintain here. Many are applying directly on what? So foreign income. No. Not on foreign income. If doubly taxed foreign income is there, on that you have to apply. That is only what? Relief under section 91. This is only relief under section 91. Understood? Yes, but very important thing you have to remember, we have to calculate everything in steps. Step 1, net total income. Step 2, gross tax. Step 3, average tax rate in India. Average tax rate in foreign. Lower rate. Lower rate we have to apply on doubly taxed foreign income. Doubly taxed what? Foreign income. Now, okay. Now we are in which questions, Section 91 questions. Okay. Whatever we have in target, we done this. Not half of where fully we discussed. But questions I am not solving. Every model one question only possible I discussed. Now I am going to discuss which models are 91 questions. If there is no DTAA, Indian country only will give the relief towards the taxes paid in which country? Okay. They will give the relief Forget about everything now. Ma, one doubt I will ask, sir, after reading the steps, okay, and already we discussed some methods of relief under 90. Is this model is similar to any model? Huh? No. Ma, remember, ordinary credit, simply. You have to maintain that clarity. In ordinary credit also we are doing the same. Okay. This is nothing but whatever the tax you paid in the foreign. Fully we are not giving. And whatever the taxes you paid in India, whichever is lower we are giving. Remember this point only. What is that point we have to remember? Unilateral relief. That is section 91. But ordinary credit, whatever we discussed about ordinary credit, are similar only. See, not similar, same. Not similar, same. If you observe, in ordinary credit also, taxes paid in foreign, we are given fully, no. We are comparing with the same amount taxed in India. Whichever is lower, that is only. But remember, but don't try to write anywhere in exam. For your understanding purposes only, I am conveying these two will give the same same answer also. What are the in direct credit method we have a full credit and ordinary credit. Ordinary credit method and unilateral, that is section 91, the procedure is same. Procedure is same. So now I want to go with the section 91. Sir, it is we have more questions also on section 91. What is that? If there is no DTAA, how we are going to provide the unilateral relief? Sir, shall we? First, basic questions will be there. Just I am giving the type of questions what we have. Basic questions. Anyone can do these questions. Okay. Second type, in my view, these are very important. Foreign tax rate computation twist will be there. Okay. In which step? I think Indian average tax rate we have to compute. And foreign tax rate also we have to compute, right? In some questions, they will give the twist related to foreign tax rate computation. So that I will concentrate also. Just whatever questions we have, all questions I am classifying to some. Some basic questions are there. Without my help also you can understood. Without my help also you can understood this. So next, second type of questions, foreign tax rates twist will be there. Okay. Next, India and country A and country B. That means in basic questions, India and one country only they will give. But future, okay, they are going to give the what? India, country A, country B. Now, there is no DTAA between all. There is no DTAA between the what? All also. Now, tell me how we are going to calculate the relief. Remember, here aggregate relief or country-wise relief? Country-wise relief we have to calculate. We have to calculate relief. Country-wise we have to calculate, not in the aggregate way. Not in the aggregate way. This is one question, but listen carefully. In country A they will give loss. In country A we have an what? Income. And India we have an income. Now tell me, we have to calculate only relief for that which country? Country B. Okay. Remember one type of question. There is no DTA between the India and country A also, India and country B also. But remember, in one country they will give only loss. If income is there, double taxation will happen. But can you tell me, India and between country A, is there any double taxation? No. So that means in this question we have to calculate the relief. Yes ma, we have to calculate in this above concept ma, relief we have to calculate between the India and which country ma? Huh? One question we have ma, we'll discuss that also ma. Country. Next ma, another type ra ma, listen carefully, important ra. First, what type of questions we have, first listen. Next, they will give the same ra, same data they will give. Now I am changing the, here also what ra, income. Now tell me, we have to calculate the country wise what ma, relief. That means once we have to calculate relief between these two, another time we have to calculate relief between these two. Country wise we have to calculate, not in aggregate. Are you identified all these questions in your workbook previously at least? These types are there ra? Okay, already I told. In regular class also I don't want to say all these models are available, because you know something already in our workbook what type of questions are there. So that's why I am classifying this type of questions we have. Every model we can touch one or one question. Now next next month, sir, 91 relief always you know already we can provide only towards the resident and ordinary resident. Sir, in some questions we have to find the residential status. They will not give the residential status. We have to calculate the residential status, and we have to calculate what ma, relief. That type of questions also they can ask. Obviously, which residential status you will get always? RO. If ROR you got an answer, then only you can do the 91 relief. There isn't one type they can ask. Next, recent exam trend questions. Yes, sir. Ma, always, sir. Always, foreign incomes we are earning, but in our questions they will give in rupees, sir. Sir, if you observe any workbook question also as of now, can you tell me? In country A we earn the income, how much tax we paid? How much income also? They given in rupees. That means in our all the questions, they converted the foreign currency into Indian rupees. They given in Indian rupees. Can you tell me here country Y how much earn ma? 6 lakh. Here also, if you observe country Y, how much amount? 6 lakh. Here also, if you observe country X, how much ma? 4 lakh 40. That means they given directly in Indian rupees. Our work is very easy. But in the recent exam trends, and not only recent, many years back itself we have this type of questions, but recently they are asking only this type of questions in our exam. Listen, what is that? Foreign income they will give in the foreign income, they will give in the foreign currency. Foreign income mentioned in which currency ma? Foreign currency. So now can I calculate the tax on foreign currency in India? My Indian income will be in rupees, foreign currency in dollars. How can I calculate net total income? How can I match these two? Ma, in section 91 you know we have to calculate the total of the Indian income and foreign income. If they are in same currency, I can add it. But one in rupees, another one in dollars. How can I calculate this net total income, etc.? So that's why whatever that foreign income is mentioned in which currency ma? Foreign currency. Now we have to convert that into Indian currency. We have to convert that income into Indian currency. Sir, you know, if anything is required to convert into Indian currency, we have to use the exchange rates. We have to use the exchange rates. Sir, if some questions they will give only one exchange rate, you are very lucky person, you can use that exchange rate only. But they will give the multiple exchange rates. Which exchange rate we have to take? Sir, nothing but during the previous year we have in 365 days. every month rate also, every day rate also they will give. But which rate we have to take? So that we'll discuss in the rule 115 in income tax rules, not in act. In our study material you didn't find this rule, but they are always given the questions. So in our material and handwritten notes clearly I mentioned the rule number 115, which rates we have to take also clearly we discussed. Understood, all of you? Okay, now one more important point I will tell you. These are the only the types we have. Okay, every type related one question we can discuss. And now before going to that, for doing these questions, definitely we need to get a knowledge about the what chapter 6a deduction. Then only you will get an answer. If you don't know chapter 6a deductions perfectly, automatically in first step itself we will do mistakes. Next steps automatically run. Understood? So ma, and tomorrow we have to discuss which chapter? Tax planning. For doing tax planning also chapter 6a deductions are very important. Okay sir, but whatever you know chapter 6a deduction, that may be enough. Don't think about it, sir, how can I revise? Don't invest any time for that chapter 6a deduction chapter. Already if you know, ignore it. Okay, I will try to upload this some 3 hours discussion whatever I have in evo batch, but don't ask me. Okay, evening after 9 I don't want to carry anything to my home, so that's why I'm unable to upload that videos or everything. So till 8 to 8:30 I am in the classes or any other office works only. Then after I don't have any time. So after completion of these classes definitely I will upload it. So otherwise my phone always ringing with the messages as well as calls only. I will upload it, but give me some time and I will do edit and I will upload it also. But chapter 6a deduction, the revision whatever I done in evo, that directly I will upload. Okay, why? What is the use of the chapter 6a reduction chapter? If you done chapter 6a reduction chapter perfectly, that will useful in 2 chapters. One is DTAA, another one tax planning. The total marks will be depending upon that adjustments only. If you done that adjustment properly, you will get correct answer. Otherwise, that answer will be in wrong way also. Okay, so before solving the DTAA 91 related questions, we'll take a break. So break we can take for the 15 minutes. Yes, 11. Okay, 11:10 you can take. Yes, sir. 1 hour I will, 1 hour or 1 hour 15 minutes I will use for the 91 questions. Every model one question. This every model one question will discuss. Then after we'll go for the theory concepts. What are the theory? PE, foreign tax credit and models of DTAA. So within 40 minutes comfortably we can discuss that theory questions also. Now please go for the break. So now in section 91 questions, first we'll discuss the basic question one. Not a basic question, but we'll take the one good question for understanding the 91. So for that purpose, I'm taking the your workbook question only, but I written in the handwritten your workbook question only. Example number 6. If you want to open it from your workbook, it is question number 11. In your workbook, this is only question number 11. Now I am discussing this question. Simply I given everything in the handwritten. Now I am going to discuss that. Amar is an individual. He is a resident of India and he received the following payments. But these payments received after deducting TDS. That means it is an net amount. If you added the TDS to this, yes, you can get the gross amount. In our computation of total income, always we have to show the gross, right? Always we have to show gross. Okay. Sir, professional fees received during the previous year 2 times. These amounts received from which country? Country X. What is that amount of TDS deducted also? Clearly they given. Please read and tell me. First related, what is the TDS amount? 50,000. Second one, 30,000. Second one, how much? 30,000. Respectively, TDS, how much deducted also they told. Now calculate the gross amount for me. It is in 2,90,000. Next one, 1,90,000. Total 4,00,000. So that means what is the foreign income now in your hands? 4,80,000. But on that 4,80,000, you paid how much foreign tax? 80,000. Can I calculate foreign tax rate easily here? Yes. What is that? 80,000 tax we paid on foreign income of how much? 4,80,000. Please calculate the rate. All of you, how much? 16.67%. So if they given rate directly, okay. Otherwise we can calculate by using the tax paid information. How much tax paid? 80,000. On how much amount? 4,80,000. It is on what? Average tax rate in the which country? Country X. Which country? Country X. Now, in India, yes, you have to calculate net total income, right? Which total income? Net total income. Foreign income plus Indian income we have to add. What is that Indian income? 5 lakh. And they given the some expenditure details also. LIC payment, it is eligible for what? ATC. SSC is opted out the 115 BAC means SSC following which regime here? Normal. So that's why can he get chapter 6 year reduction? Yes. Now one more point I want to tell you. He incurred how much expenditure for earning that 4,80,000? 2,40,000. That means for earning the 4,80,000, we incurred how much? 2,40,000. Now what is the net amount we have to tax? Simply 4,80,000 we earned from foreign, but in India, yellow deduction of 2,40,000. How much is effectively taxed? 2,40,000 only. That means foreign income 2,40,000, Indian income 5 lakh. Please calculate the PCBP. How much gross if you computed? What is the income you received in the form of gross? 4,80,000. But for earning the 4,80,000, how much expenditure we incurred? Sorry, 2,40,000. Finally, what is the tax? 2,40,000. That is our assumption. Professional fees received means we are receiving the income under the head PCBP. But what is that amount taxed? Net amount only we have to tax. And other sources income 5 lakh. Totally gross total income. Please tell me how much it will be? 7,40,000. Gross total income is 7,40,000. Now easily we can calculate net total income minus chapter 6A deduction. What is that? 80 CMA 70,000. If you remove that, we received the net total income. This is only step 1 already done. So next we have to calculate gross tax. Please apply the tax rates and confirm whether this computation is correct or incorrect also. Please apply the tax rates and you will get the tax liability. How much you will get tax liability? How much you will get tax liability? Ma, 48,360, including surcharge and health and educations we calculated. Here there is no surcharge. Why? Total income does not exceed 50 lakh. Individual, if total income exceeds 50 lakh only, we have to calculate surcharge. Now, we have to calculate Indian average tax rate. How to calculate Indian average tax rate, ma? Tax divided by total income. How much, ma? 7.22. Foreign rate already we calculated, ra? Yes, 16.67. Whichever is lower, ma? 7.22. That 7.22 we have to apply on the doubly taxed foreign income. Foreign income 4 lakh 80. But in foreign, how much taxed? 4 lakh 80. But in India, 2 lakh 40. Can you tell me what is doubly taxed? 2 lakh 40 only. Foreign income we have 4 lakh 80. In foreign, how much is taxed? 4 lakh 80 taxed. But in India, how much is taxed? 2 lakh 40 only. So that's why doubly taxed foreign income means how much here? 2 lakh 40. On that, please apply that rate. Please calculate relief. And after relief, what is the tax payable? 31,032. Please round it off to nearest multiples of 10. Understood all of you? Yes, ma, clear? So this is one question, not basic one. You have to apply the entire 91 procedure. If any amount they given in the after TDS, you have to do grossing up that things. And this is a basic question we discussed. Next, we have to discuss the second question related to foreign tax rate. Sir, in this question, we calculated foreign tax rate easily. In some question, they will give but in some questions, we have to calculate. But that computation is difficult in some questions, ma. Now, I will take that questions. Yes, we have to solve that questions now particularly. Shall we? Yes. Question number 16, foreign tax rate, only the issue in this question. Question number 16. Next, question number 18. What is that, ma? Question number 18. Shall we discuss these two now? Ma, shall we discuss these two questions now? Yes, sir. Ramesh is, how many years, sir? 61, remember. And is following the which regime, sir? Normal. Means basic exemption limit is how much we have to take? In tax computation, this is very important. Okay. Next, ma. He earned the income from how many countries, sir? 2 countries. Country M, India. And between these 2 countries, there is no DTA. If there is no DTAA, we have to solve the question under which section, ma? 91, unilateral relief. Okay. Just I will read every income and I will decide whether it is taxable under which head of income also. House property income. Please tell me whether it is foreign income and Indian income first. Ma? So foreign income. And it is taxed under which head, ma? House property. Ma, they given income from house property means it is a final amount. That means after removing everything. Yes, ma. If you observe that income from house property, how we are going to compute? GAV minus municipal tax. You will get NAV minus standard deduction minus interest on borrowed capital Finally you will get what ma? Income from house property. They given this figure here, they are not giving any rent etc. They given income from house property. If they given rent you have to compute everything. In this question what they given ma? Income from house property, final amount after computation they given. Clear? Yes sir. Next ma, business income in India, it is which income? Indian income, taxed under which head ma? PZBP. Next dividend income from the which country ma? Foreign. Yes, it is an foreign income. It is an foreign income and taxed under IFOS, dividend amount. Royalty income, yes, that is also foreign income only, because that is arises from which country ma? Country M. Sir, royalty amount we can tax under, okay, if you are a professional writer, PZBP, some cases PGBP, some cases other sources. Here we given it as an other source. Why you have a business, other business is there, it is an incidentally you are receiving, that's why other sources we classified. Next one ma, business income in country M, it is an which income? Foreign income, taxed under which head? PZBP. Income from house property in India, it is an which income? Indian income, taxed under what? Income from house property. Donation to Prime Minister National Relief Fund ma, on this we can claim chapter 6A deduction 80G, it is in category A, 100% you can take it as what ma? Deduction. Medical expenditure incurred for the mother, medical expenditure if incurred on that mother, if there is no policy, that is medical insurance policy, we can take deduction of how much ma? 50,000. Yes, here 60 given, but we can take the deduction 50,000. In that country, what is the rate? 20%. But here you have to check the note point clearly. Royalty income related. Ramesh disputed the royalty income in the country M, but he paid the tax after appeal disposed by the appellate authority. He is not at all paid any tax properly, but after he is disputed with the department. Which department? Foreign tax department. He is going for appeals. Appellate authority given the what? Judgment in 2025, on that you paid tax. What is the tax you paid on this? 15%. So if you observe, normally what is the tax rate here? What is a 20%? General rate how much ma? 20% on that foreign income. Okay, here clearly given what is the rate? 20%. So in this also, on this also what? 20%. But royalty related is taxable with the what ma? 15%. Remaining what? 20%. Sir, I am highlighted the whatever the foreign incomes are there. The foreign incomes are generally taxed with the 20, but royalty income alone taxed with the what rate? 15% rate. Now, ma, we can calculate the net total income first. Step 1 is what? Net total income. That means first which head of income ma? House property. How many incomes are there? 2. Please add the 5 lakh as well as 2,50,000. 5 lakh as well as what ma? 2,50,000. Understood? House property income identified. Next, what are the heads we have ma? House property, after that PCBP. How many incomes ma? 8 lakh and 2 lakh. PCBP also 2, 8 lakh, 2 lakh. If you summarize it, the question answer will become very easy. Okay, next house property over, PCBP also over, other sources 2 we have 1 lakh as well as what? 4 lakh. Now tell me, what is the gross total income? 22 lakh 50,000. Ma, here itself if you added everything you will get 22 lakh 50,000. We taxed under different heads of income. Indian income we added, foreign income also we added, we got this. On this, please remove the chapter 6A deduction 50,000 and another 50,000. Even though medical expenditure 60,000, we have to restrict with the water 50,000. So please remove 1 lakh. How much net total income you can receive? 21 lakh 50,000. please calculate the tax ra. Here basic exemption limit is 3 lakh. So that's why 3 lakh to 5 lakh, how much is there? 2 lakh. 2 lakh into 5%, 5 lakh into 20%, above 10 lakh, how much is there ma? 11 lakh 50,000. So on that, please calculate cess also. What is that amount you will get relief before relief, how much you will get? Now in India, what is the tax rate means? Simply you can calculate. Tell me what is that average tax rate in India ma? 4,73,200 divided by 21,50,000. How much you will get ma? 22%. How much you will get? 22% you will get. Now in foreign, average tax rate computation is very important here. Already I told you in this question what is the key point ma? Foreign tax rate. So they given 20 as well as 15. Can I do average of 20, 15? No. How to calculate? Remember, we have to calculate the what? Foreign tax. You have to calculate what ma? Foreign tax divided by foreign income into what? 100. Okay. Foreign income I know already. What is a foreign income ma? Please do total. 2,50,000, 1 lakh, 4 lakh, 2 lakh. What is the foreign income? 9 lakh? 9 lakh 50,000. Ma, already I know what is that foreign income. 9 lakh 50,000. Can I calculate the foreign tax now? Ra? Ma, here what are the foreign incomes we have? 2 lakh 50, 1 lakh, 4 lakh, 2 lakh. Can I calculate foreign tax? Ra? Yes. Please calculate foreign tax by applying the relevant foreign tax rate. 2,50,000 into 20%. How much ma? 50,000. Next one ma. Please calculate the 1 lakh into 20%. How much? 20,000. Use M plus MRC option. Next 4 lakh into 15%. Here royalty related concessional tax rate will apply 60,000. Next 2 lakh into how much ma? 20% M plus MRC. It is 40,000, right? Total ma? 1,70,000. Now foreign tax also we know 1,70,000. So 1,70,000 we collected on 9,50,000. Now tell me what is a foreign rate? 17.89. What is that? 17.89. Amma understood? Indian rate 22. Foreign rate 17.89. Whichever is lower ma? 17.89. This 17.89 we have to apply on which income? Doubly taxed foreign income. Tell me what is a doubly taxed foreign income? Simply 9,50,000 taxed in foreign also, same 9,50,000 taxed in India also. So that's why doubly taxed amount will be 9,50,000. This is what ma? Doubly taxed foreign income. Here entire foreign income is doubly taxed. In foreign country 9,50,000 tax. In India also, please observe ma. This one taxed. This is also taxed. This is also what tax. Totally how much? 9,50,000 into 17.89. What is the relief ma? 1,70,000. Please remove the relief from the tax liability before relief. And if you remove, how much you will get? 3,03,200. Even though I am explaining in speed also, please tell me, are you understood this question? Sir, many students will do overaction like 20 and yes ma 15% is given. Yes, they are doing the average. Yes, 20% plus 15% divided by 2. Don't do this. If you do this, your marks also will be average. Okay, this with the discounting. With the discounting they will do average. So forget about this question. Now we'll discuss the one more question. Question number 18. This is also with respect to what ma? Foreign tax rate twist only. And this is the main important. Many are asking the doubt. I am not selecting the questions which are very easy. If I am saying very easy questions now, then this session is not at all useful. Okay, I will tell you some difficult questions only. If you understood that, okay. Otherwise, if any point you are not understood, please go and revise again. Okay. Question number 18 now I will discuss. Vibha is a musician. What is that age ra? 37. Immediately I will check. Akka following which regime ra? 115 BSc. 115 BSc. So she given the music concerns in the nation N also and India also, and there is no DTAA between the India and nation N. Now they given the following details. Music concerns in India. So she is a professional singer. That's why we are going to tax this under what ma? PCBP. But it is an Indian income taxed under which head ma? PCBP. Next one ra. Income from music concerns. Yes, that is nation N. Which income? Foreign income taxed under which head ma? PCBP. What is the residential status of her? Clearly they given resident in India. That means ROR. So now which incomes are taxable in her hands ma? Entire global income is taxable. Next, agricultural income in nation N. In that nation that is exempt ma. But in India that is taxed under income from other sources as an foreign agricultural income. Indian agricultural income is exempt. But foreign agricultural income is taxed in our hands under income from other source. Loss from card games ma, if income we can tax it with the 30%, that loss is not allowed to set up with any income because it is a casual activities related loss. We can't do set off also, we can't do carry forward also. We can't do set off, we can't do carry forward also. Ma, chapter 6A deductions are not available. Life insurance premium paid and PPF paid, ATC available if SSC following the normal rates. Here SSC following 115 BAC. That's why these are also not available. Now this line is, please read. In nation N, there is a flat deduction of 20% of total income and balance income is taxed with what ma? 12%. They are not given directly foreign tax rate. They given indirectly. What is that? Flat deduction 20%. After balance amount is taxed with the 12%. They are asking total income as well as an tax liability. Shall we discuss? They are asking suitable notes also and computations also. Clearly they are asking. In calculator, whatever you done, please write it down in every point in the exam. Tax computation we can do in calculator, but in exam you have to write it down in an brackets and working note also, that also. So first ma, PCBP income 2 are there. How much ma? Sir, foreign income only they given already converted into Indian rupees. Okay, if they are not given in Indian rupees, we have to convert it. That questions also we can discuss. But now tell me, PCBP income 12,10,000 or not ma? Yes, total of these two. And income from other sources how much ma? 2,12,000. Is there any other income is there? No, it is only GTI. Unfortunately it is only net total income also, because no chapter 6A deductions are available in this question. Next, what is the rates we have to follow? 115 BAC rates. Up to 4 lakh nil, 4 lakh to 8 lakh 5%, 8 lakh to 12 lakh 10%, above 12 lakh how much is there ma? 2,22,000. And please add health and education cess. Please tell me whether this tax is correct or incorrect. Please calculate and tell me, all of you. Tax liability on 14,22,000, correct or incorrect ma? Clear? Done. Average tax rate, how to calculate? This 97,032. Don't do rounding off now. Finally, whatever the tax you are going to pay to the department, that only you have to do rounding off. Don't do rounding off. And tell me 14,22,000 into 100. What is the rate? 6.82 we got. Now foreign rate we have to compute. Okay, shall we start the foreign rate ma? Okay, tell me What is that income taxed in foreign country, ma? This is exempt and this is only what, ma? We have to tax. How much we have to tax, ma? 6,70,000. What is that flat deduction, ma? 20%. After deduction, sir, simply exemption. In India, 2,50,000 exemption, 3 lakh, 5 lakh. In default tax regime, 4 lakh exemption. Like that, in that country, how much you earn? 20% is deduction, flat deduction. The remaining is taxable with the what, ma? 12%. Please tell me the remaining, ma. 6,70,000 minus 20%. How much you will get? 5,36,000. On that, we have to pay tax by using the 12%. Can you tell me what is the tax, ra? Ma? 320. So, foreign average tax rate we have to compute. Now that many experts will come in this point. For this point only I am saying an explanation. Listen. Foreign tax is 64,320 divided by how much we have to take? 6,70,000. No. Many are asking like, sir, we are calculating tax on 5,36,000. No. We are calculating tax on 6,70,000 only. In that process, we given the exemption of how much, ma? 20%. But on which income we calculated? 6,70,000. How much, ra? 100. What is the rate? Ma? 9.6. If anyone is arguing, sir, this is incorrect. Now I will ask a question. If it is incorrect, okay, in this computation also, yes, ma, here you have to take what, 4 lakh we given exemption. On 14,22,000, how much exemption we given? 4 lakh. So remove this 4 lakh. Okay, simple logic. What is the total income we have to pay it? On that we have to calculate tax. What is the total income? 14,22,000. While calculating the tax, we given the what, ma? Exemption. Okay, here also, while calculating tax on 6,70,000, we given what, ma? Exemption. How much? 20. Understood? Whichever is lower, ma? Ma, these two, whichever is lower? 6.8. Now, doubly taxed income is how much you have to check. Remember, in foreign, only this is taxed. In India, both are taxed. In foreign, only what, 6,70,000 is taxed. In India, we taxed both. Doubly taxed amount is 6,70,000 only. Understood? In India, we taxed, yes, ma, this 6,70,000 also, this 2,12,000 also. But in foreign, this amount is what, ma? Exempt, means how much tax? 6,70,000. Doubly taxed amount is how much, ma? 6,70,000. On that only we have to apply the relief percentage. Ma, foreign tax rate related, the twisted questions, these two only we have. We discussed these two questions also. Now we will make a move on towards the next model. What is that, ma? Next model? There is a country, India, and they will give two countries. India, along with they will give what, ma? Two countries. But in one country only they will give income. In another country they will give what, ma? Loss. Now we have to calculate the relief between the India and which country? Country B. That means here only we are getting double taxation. So that's why relief we have to calculate between these two countries. This is a normal only. Shall we discuss one question only we have related to this? Shall we discuss that question, Ra? Yes. But remaining questions also, at least you have to do practice. At least you have to do practice of those questions. Okay, this only question number 12 we can discuss. What is that, ma? Question number 12 we can discuss. Shall we? Up to 12:30 we'll go with this concept of 91 questions. In the remaining half an hour we can use for the theory. If it is over before, then we can shift. Okay. Arvind is a textile merchant and he is a resident and ordinary resident and he having the business in India as well as what ma abroad. Yes. First, income from business in India. What is that? Income from business in India. Tell me, Ra. Okay. Which head ma? PZBP. How much? Ma? 27 lakh. And it is on which income? Indian income. Next one ma. These 2 points combined. Ra. Combined means related points. You have a business in the country A also. And between the country A and India, there is an DTA or there is no DTA? There is no DTA. You have an income. It is which income ma? Foreign income. That related foreign income, the tax paid details also they given. Okay, nothing but in that country you have an 15 lakh. In that country, how much tax you paid ma? 5 lakh. So now tell me, what is the rate? 5 lakh divided by 15 lakh into 100. How much ma? 33.33%. Next ma, there is an loss from the another business which is located in country B. With this country also, we don't have any DTAA. But remember here, another country business also we have. Abroad means here, country A, country B. In which country we have an income? A. In which country we have a loss? B. Now tell me, with country, which country related double taxation will arise ma? Country A related double taxation will arise. Country B related, there is no double taxation. Why? In country B we don't have any income, only we have what? Loss. Now contribution to provident fund, SSC following the old regime, so that's why we can get 80C here. And next ma, 80C is not available here. Why? Life insurance policy, if you taken on your life, your spouse life, your children life. Children means any children, dependent also okay, independent also okay. But here SSC taken on whose life ma? Father and mother. So on father and mother, yes, if you taken life insurance policy, that premium is not covered under 80C. 80D, medical insurance policy you can taken on your father and mother, but 80C clearly on whom? Self, spouse, any children. But 80D, medical insurance policy you can take on your family, that is self, spouse, dependent children. In 80D, children means dependent children, and father and mother also you can take. Life insurance policy restricted to your family only, that means you, your wife and your children. Next, yes, we have to calculate the normally only here country wise relief is not required. Only one country related relief we have to calculate. Please tell me, India business income, country A business income, and another country business loss. Remember, foreign country business loss also we can set off, no problem. In set off and carry forward chapter, already we discussed in enter. But remember, any business loss, Indian business loss also, foreign business loss also, we can set off with the business income. Now, after set off, what is that? Business income we got, that is only gross total income ma 38 lakh. Ma understood? So if you observe, these two required to tax, but loss is there, how much? 4 lakh. Totally if you done set off, how much it will be? 38 lakh. 80C we can take 1 lakh 50, you will get 36 lakh 50,000. Please calculate tax by using these rates, because old regime SSC A's they not mentioned, so that's why below 60 years 2,50,000 exempt. After 2,50,000 up to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. So add health and education says how much? 4%. So now tell me, Indian average tax rate, tax divided by net total income. How much rate you will get? 25.86. Correct? So foreign rate already we calculated. Which country we have to take here? Foreign means country A. Already we calculated. What is that? 33.33. Whichever is lower, Anna? 25.86. That we have to apply on doubly taxed foreign income in with respect to country A. In country A, how much tax? 15 lakh. In India, how much tax? 15 lakh. Doubly taxed amount is how much, ma? 15 lakh. That we have to apply. Now, please remove the relief. That means before relief, this is an tax liability. Remove the relief. Finally, what we have to pay, ma? 5,55,900. 5,55,900. Clear? Next, shall we discuss? One question only we have. We discussed this concept related also. Yes. Can you tell me in our question, country A we have an income, country, okay, whatever. Here reverse I written, but anything also, one country you have an income, another country you have a loss. With respect to that country only we can calculate the relief. Now, next question, India and they will give two countries. Two countries related income if anything is there. Now double taxation will arise with respect to two countries. Now you have to calculate the country wise relief. Which country wise relief. Now I will select the one question in order to explain that. I will take this question, but there is a reason why I am taking this question. There is a reason, the new examination trend, this question only, indirect information they will give in the question. By using that indirect information, we have to find something. Okay. Two countries are there. Can you tell me what are the countries? X, Y. Shall we discuss this? If I am discussing this, the majority of your burden can be reduced. Okay, what is that indirect information will be given in the question. What is that indirect information also we can check it out. Shall we? What is that SSC name? Manoj. He is doing the business in India, country X, country Y. Yes, in between these countries there is no DTA. Assume Manoj not opted the 115 BSc, means he is following what normal. Okay, shall we discuss Tell me the first one. What is that business income we have? Automobile business in India. This is an Indian income. Taxable under which head? PZBP. Income from rubber estate in country X. It is an foreign income. Taxable under what? PZBP. Foreign income, that one. Don't consider it as an agriculture estate. Okay, business only. Even foreign agricultural income also tax. But here it is in business in foreign country, PZBP. Next, loss from textile business in which country? Country Y. So can you tell me it is loss from the business? It is an foreign country related only. Yes, Next one, income from the property in the country X. Can you tell me income from property in country X they given? It is also which income? Foreign income. Taxed under which head? House property. Okay, as of now in foreign we have a house, right? Anna, we have a house in foreign. Next one, income from the, yes, income from the authorship of a book in country Y, not eligible for deduction, nothing but it is also foreign income. Authorship of a book, so we are going to tax under the income from other source. You have another businesses, so that's why this income of the royalty will tax under what? Income from other source. Contribution to public provident fund, 80C. Now it is which property? Let out. Why? We receiving income means what? Let out. Now you have to listen carefully. They are saying housing loan interest with respect to self-occupied property. Now we have to identify there is an house in where? India also. Sir, they given you are paying the interest with respect to self-occupied property. Means indirectly you have an house here in India. They are not saying house property in India is there. Or you are paying interest related loan related interest you are paying, means you have an house in India, that is an self-occupied. Now totally how many houses? Foreign house let out, Indian house self-occupied. Ma, can you tell me this amount you will get it as a deduction under which section? 24B. In income from house property computation, you will get interest on borrowed capital as a deduction under section 24B. Next one ma, loan repayment done ra. Above one principle, loan repayment, housing loan repayment amount is allowed as deduction under 80C. Ma, understood? Health insurance premium paid for the non-resident parents ma. Yes, even though non-resident parents, senior citizens also, we are not going to give the 50,000, we are going to give the 80D, how much ma? 25,000. Ma, tell me, indirect information ra, by using these points you have to understood we have in one house in India that is self-occupied. So now please tell me, house property head will attract, right ra? House property means how many houses ma? 2 houses. One is let out property in country by 50,000. They given clearly what is the let out property income in that country by ma? 50,000. Self-occupied, NAV is 0. Interest on borrowed capital maximum how much we can take ma? 2 lakh. So that 2 lakh. Finally, in one house you have a profit, another house you have a loss. After doing set off, what is the loss from house property ma? 1,50,000. What is that? 1,50,000. Anna understood first of all how we are computed the house property. Yes, indirectly by using this point we have to identify there is another house property also. Next, PCBP. Can you tell me how many businesses we have ma? In India, one income, in foreign, one income, and we have a loss. Please tell me, after doing the setup within the PCBP head, how much income is taxed in India? 9,10,000, 5 lakh, 2 lakh. Total minus if you are done, how much it will be? 12,10,000. Now I want to ask you one thing, ra. Other sources incomes also there. Please tell me, other sources incomes how many are there ma? Only one. How much ma? 3 lakh. How much ma? 3 lakh. Now I want to know one more thing from you. Yes, the house property loss, if anything is there, can I set up with the other heads? Yes, if that is a maximum, how much we can set up? 2 lakh. If SSC following 115 BSc, we can't do setup. Ma, remember, if an SSC following 115 BSc, house property loss, we can't set up with the what ma? Other heads. Here SSC following which regime? Normal. So that's why you can set up maximum 2 lakh. Here 1,50,000 only. Please do set up. And after that, what is a GTI ma? After doing the set off of that 1,50,000 with the any head of income also, what is that? 13,60,000. That is GTI. Please reduce the chapter 6A deduction. How much ma? Ma, 70,000, 1,10,000. Totally we can take 1,80,000. No, that is restricted with the 1,50,000. 80C is 1,80,000 related investment is there, but we have to restrict with the what ma? 1,50,000. Please take here. We reduce it to 1,50,000. Next one ma, 80D amount, even though senior citizens also, they are non-resident. That's why we are going to restrict with the 25,000. After removing the standard deductions, chapter 6A deduction, it is what ma? Net total income. Please calculate the tax liability ma. Here, Manoj's age is 50 years and please calculate how much you will get ma? Tax you will get how much ma? So now I am highlighting with the total income and tax this one. What is that average rate? 1,74,720 divided by 11,85,000. How much it will be? Sorry, 14 point. In India, this is an average tax rate. But India and two countries are there, right? We have to calculate the relief. What ma? Country wise. Can I calculate the country wise relief ma? Yes. First, Indian average tax rate. Please accept this 14.74. Foreign average rate directly they given in the question. In foreign 10% without basic exemption, in another country 25% without basic exemption, whichever is lower whichever is lower, that means in foreign 10%, in India 14.74 with respect to country X, whichever is lower 10%. Now we have to apply on the doubly taxed foreign income in the country X. Can you tell me, please check it out the question country X income, we have only one income that is already taxed in that country. Now again this is taxed in this country. Totally how much 5 lakh. 5 lakh into lower rate. Please apply how much relief 50,000. In country Y, tax rate already we discussed 25%. In India, 14.74. Whichever is lower, 14.74. In country Y, remember how much is taxed? In country Y, please check it out, all of you. How much is taxed? 3 lakh 50 minus 2 lakh, how much 1 lakh 50. That means doubly taxed amount in both the countries is 1 lakh 50 only, because even though you have 3 lakh 50, but how much we then set off in India? 2 lakh. That means doubly taxed amount is 1 lakh 50. So in country wide these incomes are there, yes, but one loss is there. Yes, this income we can set up with the loss. Finally, on which amount we paid tax in India? 1 lakh 50. In foreign, how much is taxed? We don't want to check. If it is taxed fully also, doubly taxed is how much? 1 lakh 50 only. In foreign, how they are collecting the tax? They are not saying. In foreign, suppose 3 lakh 50 taxed. They are not doing the set off. What amount is taxed? 3 lakh 50. But in India, how much tax? 1 lakh 50. Means doubly taxed how much? 1 lakh 50. 1 lakh 50 into lower of the rate, if you apply it, you will get 22. Both the things, if you added, how much 72,110. Sir, please reduce 72,110. Yes, this amount. And it is 610 only, not 600. Clear? Sir, you have to practice these questions. They can give these questions mostly. The two countries information if they given, two countries related income if you have, we have to calculate the relief country wise. Clear? Now, what is the next target we have to discuss? Yes, I will tell you, residential status we have to compute. Along with that, we have to calculate relief. Now, I will tell you one question combinedly for this. That more detailed explanation also I will give. Shall we discuss that question? Yes. Before that, we have to discuss the rule 115. That means if any foreign currency is given, yes, we have to convert that foreign currency into Indian rupees, right? How? By using the rule 115. Please open the rule 115 in your handwritten. Yes, ma. What are the exchange rate we have to use for converting the foreign currency into what Indian rupees. What is the rule? 115. Suppose we have two types of rates, buying rate, selling rate. The telegraphic transfer, buying rate and selling rate. Simply bankers rate. But always they will use the TTBR and TTSR. Okay. These rates are given by whom? RBI. Okay. RBI rates only we have to take it as an reference. In foreign country, if you have a salary income, that salary income we have to convert into Indian rupees by using the telegraphic transfer buying rate, not selling rate. Buying rate, which date rate we have to take? Salary month. Okay, it is March month. Okay, March month related salary. Salary due or paid related to which month? Salary. Sorry, March month. Immediately preceding month ending date. What is that ending date? 28th February. On that date, what is the TTBR? That exchange rate only we have to take. That means salary related, clearly they are saying which month salary. Okay, that month preceding month last day. That month preceding month what last day. Last day of the month immediately preceding to the salary is due or paid. Next house property income if you have in foreign country, if they given that amount in the foreign currency, how to convert into Indian rupees? Here also they're clearly saying that buying rate only please take, even though they given selling rate ignore it, please take only buying rate. But which date buying rate? Last day of the previous year, that is 31st March of what is that present previous year last day 26. Here end date rate we have to take. Next two incomes we converted. If they given the PCBP income other than what non-resident shipping business. Sir, why? I clearly given if non-resident engaged in the shipping business, how we are going to convert that separately. So that's why please exclude. Yes, all businesses exclude non-resident shipping business. The remaining all businesses telegraphic transfer buying rate on which date? Last day of the previous year. Sir, up to now if you observe house property and businesses other than non-resident shipping business, the same rate we are going to use for conversion. Now non-resident shipping business again clearly they are saying whenever that month you are going to accrue or erase that income. Suppose in the month of August we have to accrue or erase immediately preceding month last day. What is that last day? 31st July. Immediately preceding month last day, that is 31st July. Whatever the rate is there, that rate we have to take. That rate we have to take. Next one, capital gain amount if anything is there, simply whenever that capital asset is transferred, suppose transfer done in the month of December, December month immediately preceding month, what is that November, last day of the November means what 30th November. Transfer done month immediately preceding month last day rate we have to take. Always which rate? Buying rate or selling rate? Buying rate only. So just I will recap. Salary month immediately preceding month last day. House property last day of the previous year. Any business other than non-resident shipping business last day of the previous year. Non-resident shipping business month immediately preceding month last day. Capital gain transfer month immediately preceding month last day. Next income from other sources, the last year. All its incomes we converted already by using the rates we discussed as above. But now what is that head is pending? Other source. In other sources, dividend separately will discuss. Interest on securities also separately will discuss. So that's why now here we are covering any income other than these two. In other sources, if any income we have other than dividend, other than interest on securities, that means common incomes like subletting income or any other amount if you received bettings, gamblings, etc. What is the rate we have to use? Last day of the previous year, 31st March of 2026. Dividend simply the dividend paid or distributed month. Example, in September month dividend is paid or distributed immediately preceding month last day. What is that August 31st. Next one interest on securities. Yes interest on securities, simply interest due in which month we have to check. Suppose interest due in July month immediately preceding month last day. What is that June 30th. If you observe, 3 cases only we have to take the last day of the previous year. What are that? House property, PCBP, other sources. Remaining all are last month, immediately preceding month, last day. You can remember in this way also. For these 3 only, last day of the previous year. The remaining, immediately month, last day. Now, in foreign country, if you paid the tax, okay, how you will pay the tax in foreign country? In foreign currency only, right? That foreign currency which you paid as a foreign tax, that is also we have to convert by using which rate? DTBR. Simply, whenever you paid the tax, suppose I paid the tax in October, what is that immediately preceding month? September 30th. What is that, ma? September 30th. Understood? Clear all of you? Ma, this is also important. Whatever the tax you paid in that country, some cases we have to convert that amount also in Indian rupees. Which rate we have to take? Tax paid month, immediately preceding month, last day. So I will take one comprehensive question for understanding the, yes, this type of questions. Ma. Without rule, yes, you can't do that question. If you know the rules, then only easily you can understood. Now I will take the question number 26 from the workbook. I will take the which question, ma? Question number 26 from the workbook. Just go through this question first for 2 minutes. Then I will start the explanation. This is only the last question on section 91. Then we can go for the PE concept, foreign tax credit, models of DTA. Please read and tell, understood the question first. Now we can try. Ankit is how many years, ma? 53 years, CFO in this company from 1/4/2021. His income in India consists of the following. So nothing but first 3 points they given the Indian income. Okay, tell me, ma, salary before standard deduction. First, please take the end of the question. SSC paying the tax by using the 115 BSc. Means what is the standard deduction we can reduce here? 75,000. Okay. Next, interest in respect of what, ma? Self-occupied house property. Nothing but in India, he having the one house, that is an self-occupied. Self-occupied house related interest if you paid, you will get deduction under which section, ma? 24 subsection B. Fixed deposit interest is there, that is how much? 1,50,000. Sir, nothing but this is salaries, first point. Second one, house property. Third one, income from other source. So nothing but how many heads of income? Yes, we have here 3. In India, we have 3 incomes. These 3 are taxable under different heads. Now, these are the incomes are arises from which country? Country A. In country A, first income, you have which income? Business income. They given in foreign currency. Now tell me, business income. This is a non-resident shipping business? No. This is not a non-resident shipping business. General business income. what is the rate we are going to use ra? Year end date. What is the year end date ra? 72. That means we have to convert by using the exchange rate what ra? 72. They given how many rates you can check. These are all our buying rates only. Which rates we have to take also clearly we should identify. Understood? Next, rent from the house property ma. Yes, they given the municipal taxes details also. Ma remember in India whatever the taxes are foreign municipal taxes paid also we can give deduction. Okay, that means rent minus municipal taxes. How much you will get ma? 4,500 minus how much ma? 450. How much NAV you will get ra? So 4,500 minus 450. How much NAV? Sorry? 4050 minus standard deduction 30%. How much it will be? Because they given rent ra. Rent means GAV. From that we calculated. You got what ma? NAV. It is GAV. It is MT. Municipal tax. Standard deduction. Finally how much ra? Ma? 28. So this is an USD. And we have to convert by using the which rate ra? Year end rate. House property also what ra? Year end rate. Ma understood? Next, dividend amount ra? Dividend related we have to convert. Asma, it is also taxed under. It is taxed under PCBP. It is taxed under house property. Yes, it is taxed under IFOS. Please tell me how much required to tax ra? Yes, March month ra? Yes, dividend in which month declared and paid? Immediately preceding month last day. What is it? Immediately preceding month last day ra? February. February means last day is how much given ma? 70. Re understood? Short term capital gain. It is taxed under which head ma? Capital gain head. Yes ma, it is taxed under capital gain. Transfer done in which month ra? March month. March immediately preceding month is in February. Here you have to convert this 5,000 also by using the what ma? 70. Here twist is there. There is an DTAA between the country ra. Between the two countries what ra? DTAA is there. It is not a 91 question. There is an DTAA. What is a DTAA? Clearly saying that tax paid in country A is eligible for tax credit in India. In country A, you paid some tax also on these incomes. Whatever tax paid in that country A, you can take it as a credit in where ma? India. So now, how much tax we paid? Clearly they given ra. How much you paid tax ra? 20% you paid the tax on all incomes ra. Yes, the tax paid in which month ma? May month. Okay, which month ra? May month. Listen, tax paid details we can compute. Yes ra, tax also we paid in which currency ra? Foreign currency. The tax paid amount in foreign currency. Now how we can reduce it in India? We have to convert that currency into Indian rupees. What is the rate ra? If any tax paid, yes ma, that paid month immediately preceding month last day. What is that paid month immediately preceding month ra? Sorry. So this is in May and April. 30th April, what is the rate given ma? 74. That means tax paid, yes, in dollar whatever is there, we have to convert by using the what ma? 74. Ma, easily you can do. Yes, the tax paid details, how we are going to calculate also, you have to know. Ma, in foreign, please to take calculator. Please take calculator, all of you. Ma, in foreign, 25,000 is taxed, right? And 4,500 also what ma? Taxed. And municipal taxes, they are not giving deduction in that country. As of now, how much taxed in foreign ra? 29,500. This 10,000 also taxed in foreign, right? Yes, this 5,000 also taxed in foreign, right? Calculate what is that USD dollars taxed in foreign, ma? Sorry, total. That means 25,000, 4,500, next 10,000, next 5,000. How much, ma? 44,500. On that income, what is the tax rate we paid, ma? 20%. Please calculate. 8,900 you paid, ra. 8,900 you paid. That is also USD, right? How to convert, ra? That 8,900, whatever you paid, we have to, yes, ma, multiply with the what, ma? 74. Yes, ra? Into what is that, ma? 74. How much you will get, ma? 6,58,600. Ma, here they given in question which method, ra? Credit method. So, but they given answer in the ordinary credit, ra? Both you can solve. Ordinary credit you can solve. Full credit also you can solve. Full credit means nothing but how much credit we can take, ma? In foreign, you paid this amount of dollars as a tax. In Indian currency, you converted. How much you got, ra? 6,58,600. This entire amount you can get it as a credit in India. But ordinary credit means this entire amount we will not give. We will check if this amount taxed in India, how much amount we have to pay. Please look at, and in this question only the difficulty is what, ra? What rates we have to take. I think all of you are getting the clarity related to which rates you have to take, ra? Remaining procedure is same, ra. Remaining procedure is same. Understood all of you? Yes. Now we'll discuss the theory questions, ra. In these 40 minutes we are going to concentrate on the theory questions. The first I will concentrate on the theory. Yes, that too first permanent establishment. Ma, I am not solved that question fully, but my agenda is nothing but what are the rates we have to use for converting the foreign income into India. Now we'll discuss the concept of permanent establishment. Yes, please open the handwritten. Yes, permanent establishment. Okay. My definition, I will tell you first of all. Before going to the definition, I will tell you this analysis. Then after we can identify the definition. Ma, non-resident, if he is doing the business in India, who is doing the business in India, ma? Non-resident. How we can tax that business income in India? If the non-resident is doing the business in India by using the permanent establishment, then we can tax that business income in where, ma? India. When, ma? If DTAA we are following, we have to check the concept of what, ma? P. If DTAA concept, if you follow, ma, act is there, income tax act is there, but between the India and other country, we haven't DTAA. That country person now doing the business in India by using the permanent establishment concept, if he wants to follow the provisions of agreement, that is only DTAA. Sir, whichever beneficial to you, you can follow. Act is saying one thing, DTAA is saying another thing. Which one you can follow? Whichever is beneficial to you, that only you can follow. Now, if we are going to follow the DTAA, now tell me how we are taxing the non-resident business income in India. If non-resident doing such a business in India by using the permanent establishment. Now remember, if DTAA is there, always you have to check the permanent establishment. Now there is no DTAA and we don't want to follow DTAA also. Now you have to follow the act, right? If you follow the act, how we are taxing the non-resident business income, ra? We are going to tax the non-resident business income. How, ma? Wait. How we are going to tax the non-resident business income? If non-resident is doing the business in India by using the business connection. Example, principal and agent relationship types of businesses are called as what for? Business connection. So regarding this, yes, section 9 will apply. Deemed to accrue arise in India. Income deemed to accrue arise in India. That is called as what ma? Section 9 incomes. So now please remember, if you have following DTAA, if you are following DTAA, non-resident business income tax, if there is an P. If you are following the Income Tax Act 1961, non-resident business income will tax if there is an business connection. Now, my question is, what is that PE? Yes, what is that PE? Can you tell me PE definition is defined in Act or not? No. There is no definition of PE in Act. Why? It is an related to agreements. Okay, India have an agreement with the 100 countries, right? How many agreements we have with the one country? One agreement. 100 countries, 100 agreements. In 100 agreements also, we have to write the what is that PE perfectly as a definition. In every DTAA, we'll write the definition of PE clearly. Okay, sir, in agreements, okay, example, any agreement if I am entered into others, we will write some points, right? Like one point in the DTAA, what we have to write? Permanent establishment. What is the general definition of permanent establishment, ma? It is a fixed place of business. Where we are establishing this fixed place of business, ma? In India. Through that fixed place of business, non-resident is doing the business entirely as well as what, ma? Partly. Non-resident is doing the business entirely or what, ma? Partly. Understood? Simply by using this business in India itself, we are doing 100% business now. Only also okay, partly also okay. What is the definition? Please repeat along with me. Non-resident is establishing the fixed place of business in India. By using that fixed place, he is doing the business wholly or partly. Now P includes, so these are all are what, ma? Fixed place of businesses in India. What is that, ma? Fixed place of business in India. What are and what, ma? If you established any branch, if you established any office, factory, workshop, sales outlet, warehouse, any mine, oil, gas well, it is extraction, not exploration. First we have to explore the natural resources. Next we have to extract. Whenever we started the extraction, that extraction place, whatever is there, that is we can call it as an PE. Last one, place of management. In exam they will give the question. By using this, yes, you can identify that is and treated as what, PE. Please repeat, what are the permanent establishment includes? Branch, office, factory, workshop, sales outlet, warehouse, extraction of natural resources, place of management. Remember how we can tax the non-resident business income. If non-resident having the permanent establishment in India, then only we can tax the non-resident business income. Otherwise, okay, there is no PE. No business income of the non-resident. Now, no need to tax in India. Next, definition of PE, we have to write it down in every DTAA under one specific clause. I will show you how they will write the DTAA, how they will write the permanent establishment definition in every DTAA also, but after some time. Now, very important thing, permanent establishment excludes. Includes we know, but we have to remember the what, ma? Excludes also. Remember, PE concept is purely related to which concept? DTAA. So that's why we have PE concept in DTAA chapter. This is nowhere related to Act. Nowhere it is related to Act. So income tax provisions are there. DTAA also there. Whichever is beneficial for you, you can follow. Now we are going with the DTAA. So now non-resident business income in India, how we can tax if we are following DTAA? If you have an PE in India, PE means already you know, includes also you know. Now we can discuss the excludes. Very important, but it is taking some time also. 10 minutes, listen carefully. Even though it is taking time also, listen carefully. Yes. How many points they are given in PE excludes, ma? 5. How many points, 5. Sir, what are the 5 points? Clearly they are excluding from the PE. First one, ma, use of facilities for what purpose? Storage or display. Now I will explain along with the example, but remember these two keywords. Okay, example, ma, foreign company, non-resident is there. In India, is located outside India. Now, in India, is sending the goods or merchandise. For what purpose? There is an art gallery, or there is a promotion, or there is an exhibition. He want to display that all the things in the art gallery. Sir, how non-resident will arrange these things in India? It is extremely difficult, right? Okay, example, he have a new car, new model of car. In India, there is an art gallery or exhibition of cars is there. He want to display his product in India. But without any other person help, can he do this? No. He is using one facility in India. Yes, one person now in India is helping. Now, whatever the car reached to that Indian port, we are going to that port and we taken that car and we submitted in the art gallery. Now in India is enjoying one facility for what purpose? Storage. After storage of that car for some days, next we are displaying it, right? Then what will be the position after displaying? Then we are going to send again these goods to whom? Foreign company. Now tell me here, any business happen? Any sale activity happen? Any income he raises? No. Just he promoted his product. By using the facility in India, what is that? Storage facility. And he displaying the goods in India. That is called as PE? No. Here we are not at all established any fixed place of business. We are taken other person services like storage purposes. Okay, one person having the warehouse. We are sending that goods to that warehouse. Then after that fellow only displayed that product in display. Again, that is reversely send it to the non-resident. Can you tell me? Use of facilities only for the purpose of storage or display. It is not treated as PE. Logically, please think, here we are not doing any sales in India. Here we are not doing any business in India. Second one, just I am continuing that example. What we are doing, here also storage or display only. But every month there is an exhibition in India. Example. There is an every month exhibition. Now, every time we are sending and displaying storage. This is difficult. Now, I am appointing one Indian resident as an stockist. So, that means he is only maintaining our stock in India. For the purpose of sale? No. For the purpose of what? Storage or display only. If any maintenance of stock in India done by the any person only for the purpose of storage or display, you can't treat that as an PE because we are not doing any sales in India. So example, yes, we are sending always. He is maintaining the stock and he is sending to the displays. Then after he is sending the goods again to us. So always he is maintaining the stock for us. That is not treated as PE. Next, this is also important. Third point. Tell me first 2 point, use of facilities for storage or display. Second one, maintenance of stock for the purpose of storage or display. Third one, also maintenance of stock. No. I will tell you. In foreign country, one company manufacture the product extent of 20%. How much extent completed? 20%. Now, further processing required to be done in India. 20% product manufacturing done. The remaining process required to be done in where? India. Now, yes, that foreign company sending the goods to XYZ Limited for further processing. But they are not maintaining the stock. In India, we are using the one person. For storage or what ma? Sorry, for the purpose of what ma? Is maintaining the stock. For the purpose of storage or display? No. For what purpose is maintaining of a stock? For further processing of what ma? Another. Simply, yes, 1 lakh product I sent. Every day he will send to the further processing. After completion of further processing of what ma? 80%. Yes, now he is taking the goods again. Yes, again that will be sent it to what ma? Foreign company. In India, we are completing the further processing only. We are not doing any sales. So that's why this maintenance of stock is done for what purpose ma? Further processing by the another enterprise. This is also not treated as what ma? P. Remember, in any point also, first one, use of facility for storage or display. Use of facilities for what ma? Storage or display. Here ma, maintenance of stock for the storage or display. Next, maintenance of stock for the purpose of further processing by the enterprise. Here we are not doing any sale activity. Here we are not doing any business in India. So that's why it is not treated as P. Two more points are there. Listen carefully. What are the points ma? Here, definitely you can you can call this as an PE. Why? By using this line. Maintenance of fixed place of business. PE definition itself started with the what? So that's why always you will treat this as an what? PE. No. Here we have a fixed place of business. Means we established one office in India. But within that office, what we are doing? Purchase we are doing. Whatever the raw material required by the foreign company, in India raw material is there. In one office, one office we established in India. This office is purely purchasing goods. Second one, collection of information. Foreign news channels also having the offices in India. Here, what they will do? Collecting the news. After collecting the news, that is transmitted where ma? Outside India. Here also, we are purchasing the goods. We are not selling any goods. If selling then, business. Only purchase done, you can't call it as business. And here, that fixed place of business, even there also, that is not treated as what ma? P. That is not treated as what P. Next also, remember, maintenance of fixed place of business only. Remember, by using these two lines, you can tempted to write it as an PE, but these are not treated as what ma? P. What is that? If you are maintaining the one fixed place of business for advertising your product, for supply of information to your customers, research purposes, survey purposes, these are miscellaneous in nature. These activities are called as what ma? Licensing office activities. Ma, every foreign company in India, they are required to establish the licensing office within the RBI guidelines. But within the licensing office, they are not doing any sale activity. They will display their products. If any customer came, they will display means what ma? Advertising. If any customer came, they will supply the information and they will conduct the research whether this product will go on success in India or unsuccessful also. They will do research, but they are not doing any sale. These activities are called as advertising, research, all the things. By establishing this fixed place of business is called as what ma? Licensing office. Licensing office activities also cannot be called as what ma? P. So PE excludes, I will tell you, use of facilities for storage or display, maintenance of stock for storage or display, yes, maintenance of stock for further processing of another enterprise, maintenance of fixed place of business for purchase of goods, maintenance of fixed place of business for collecting the news. Next, maintenance of fixed place of business regarding that what ma? Licensing office activities. These are all the cases that is not treated as what PE. Understood? So now PE concept is over. Now in your free time, yes, one question is there related to PE. Definitely you have to refer that question. Question number 30. Yes, it is a past exam question. Yes, they are asking the few questions and whether these are PE or not, you have to decide. Yes, ma. Question number 30. Please refer in your free time. Now we have to discuss the next models of DTAA. It is important, so that's why I am taken in a preferential manner. Then after we can discuss FTC in a speed way also, because it is not asked in the recent or past exams also. Models of DTAA, Yes, very important. In every attempt, you can get the question also. And I want to give you one more update regarding these models of DTA. So that's why now we'll discuss this. Shall we? Yes. Now, simple way I will explain. Okay. Sir, I want to enter into rental agreement with you only. Okay. Now, can I write everything now? Or can I write everything means okay, so and so tenant and so owner, address, terms and condition. Can I write it now? Or is there any draft formats are already available in market? Draft formats are already available. I will change the name of the parties. Okay, if any new terms if you want to add, you can add. If any points you want to delete, you can delete, right? Like that only. India wants to enter into agreement with the other countries. Sir, both the countries, how they can write every point, sir? Already, the models of DTA is there. You can take any one of the model which are applicable for you. Then you can make necessary changes in that. Understood? Yes. Now, I will tell you that models are the first OECD model only there. What is that, ma? OECD model only there. Organization for Economic Cooperation Development model is there. But next they introduced the UN model. Next we have an US model. Totally how many models of DTA is there? Simply the conventions. Conventions means these are the methods already given. These are the draft formats are already given. You can select whatever you want out of these three. Model conventions also we can call or models of DTA. How many models we have, ma? 3. What are the 3, Anna? OECD model, UN model, next one, ma? US model. Shall we? Models of DTA. Sir, why DTAs are required? Now, we are doing the business with any person involved, right? We are earning income from any country. Now, if you are earning the income from any country, definitely double taxation will arise. In order to provide the relief for double taxation, now we want to enter into all countries double taxation avoidance agreement. Example, you can imagine, in Australia, our Indian residents are there or not? There. You are a resident in India, but you are doing the businesses or anything in Australia. Like in any country also, our residents are there. Now tell me, automatically in their hands double taxation will arise or not? In order to remove the double taxation, what Indian government required to do? We have to enter into agreement with all the countries. That is only the need. So now, while entering into the DTA with all the countries, we haven't separate models. How many? 3. Any one of the draft model you can take and you can write whatever you want. Understood? Now, I will tell you how many models are there, ma? 3. What are the models, ma? OECD, UN, US. Okay. Now I will tell you the first OECD full form, ma? Organization for Economic Cooperation Development Model. When it is introduced, 1927, draft model is introduced. Draft model is introduced. Yes. Next, revised several times. The finalized version where, ma? 2017. Who prepared this model? Physical Committee of League Nations. Now, when we have to use this? If DTA between which countries? Developed countries. Ma, example, Australia and Japan wants to enter into agreement. Now, which one we can use? The OECD model they can use. This model, yes, whatever they drafted, it is suitable for which countries? Developed countries. Understood? Next, sir, then later, 1927, 2017 means earlier, developed countries only can use this. Then what about the developing like us? So now there is a need of UN model also. First draft model 1968. Yes, latest version 2021. Who prepared this? United Nations of what, ma? Ad hoc experts. Ad hoc experts. This is between the what ma? India and yes ma, example UK. Developed versus what ma? Developing. Developed versus what ma? Developing. So now always India will entered into DTAA with the which model ra? UN model. Which model ma? UN model. Again I am saying India will entered into DTA with all the countries by using UN only. The majority of DTAs in India we entered with the which model? UN model. Already you know ra. One point I will tell you. Yes, listen carefully. Sir, we are giving the importance to which principles ma? Source principle. Means already we discussed ra. In exemption method, we are giving the right of collection of tax to which country? Source country. We are giving up our right towards the what ra? Tax collection. That means we are giving the more weight to which country? Source country. Source country is already developed one ra. So that's why you have to give the weight to them only. Understood? Source country means other country. We are giving the weight to them. That means source country will collect the tax on such income. We are giving up our right. That is only we discussed right in our tax exemption. That is full exemption or what ma? Exemption with exemption method, full exemption or exemption with the progression. Now one more important MCQ, the majority of in India, the treaties are by using the which model ma? UN model. One more point I want to tell you, listen carefully. Then what about the OECD model ra? OECD model giving the preference to which principle ma? Residence principle. Okay, correct time avutundi aithe. What is that ma? Residence principle. Just I will explain, listen carefully ma. OECD model is given the preference to resident country. That means resident country will collect, source country will maintain the silence. But in India, which one we are following? UN model. The remember, UN model is giving the weight to which country? Source country. That only we discussed in the exemption method. Source country can collect the tax, resident country will maintain the silence. My US model is unimportant. Why? If any country wants to enter into agreement with the US, they prepare that model. That is not so popular. Which one is popular in India? UN. Sir, 20 times, 30 times they given this MCQ. The measure, many of us, first of all, they don't know what is a model of DTA. Draft formats are there, 3 ways are there. Which one we have to use? Which one is suitable for us? We can use it. In India, yes, we want to enter into agreement with the developed countries. Yes, which model is suitable for us? UN model. What is that? UN. UN model is giving the weight to source. OECD model is giving the weight to resident. Understood? Now, draft format means length also we have to check. Paragraphs also we have to check, right? Okay. Now, this is only next attempt MCQ pakka in your June exams in OECD model. What is that ma? In OECD model. Yes ma? Okay. OECD model. How many chapters are there? Parts? 7. Here UN also how many chapters are? 7. This is same. But how many articles? How many points we written? 32. Here how many points ma? 31. It is an MCQ important. Remember, if you open the DTA draft format, how many chapters? 7. How many articles? 32 in OECD and 31 in UN. Now already I told one point. Every DTA must define the what ma? Permanent establishment, right? Now if you open the concept book, I given the what are the article numbers also. Listen carefully. Yes ma? What are the article numbers also? Clearly I written here. Listen. This is also you can expect as an MCQ. This is also you can expect as an MCQ. Please listen. In December 25 also from this they given MCQ. Can you tell me? In OECD model, article numbers are how many ma? 32. In UN model, how many articles they given, ma? Ma? 31 only. Now, this 31 points related matter already there. You can directly copy and paste, or you can make changes also. But remember, every DTAA must define the what P. Yes, remember this. In which article we are drafting about the P in both the models, fifth. And in exam they can ask this because in MQP this point only there, business profits how we can tax. Example, if any other person, that means other foreign country person is coming to India, if he is doing the business, how we can tax that business profits, we will write it down. If our Indian resident is in your country, if he is doing the business, how this amount is going to tax, we will write it down. So business profits, that is what, ma? 7. Next, one more point, last attempt. Yes, they given the independent personal services income, if anything is there, that related taxability in UN model is drafted in which 14, but the corresponding is deleted. It is only your December 25 MCQ. December 25 MCQ. Independent personal services in which article? 14th article. Corresponding article number is deleted. So now, this is only December 25 MCQ already they given. So now, this is also, sir, if you haven't time, if you are writing only one group, if you want to get 2 marks pakka, you have to remember this 32. But sir, I don't have time, sir. Please tell me, this is also you have to remember. Here corresponding article is there or not there? Not there. So they asked, yes, business profit in the June 26 MQP. That is an PDP. So this maybe they can ask why every DTA must define the what, permanent establishment. We can write this. Understood all of you? Yes. Permanent establishment discussion done. Models of DTA done. If you know that concept easily, you can understood. Majority of DTAs in India following which model, UN model. Okay. Now can I link both the permanent establishment as well as models of DTA? Can I combine? Yes. In what attempt they given, this is the most important thing. Now I will tell you. They are asking the in question number 31. Permanent establishment meaning they are asking. Yes, at the time of writing the meaning, please write includes also. Permanent establishment includes also, please write it down. Yes, ma. Then after they are asking, okay, we discussed the permanent establishment definition, right? Includes and excludes, right? Okay. Whatever we discuss, that is as per which model? UN model. Because we are following always what? UN. Ma, UN model is saying that. UN model is saying that. Use of facilities for storage or what, display is cannot be treated as what, P. You know already, use of facilities for storage or display. Next one, maintenance of stock for storage or display. But OECD model base, that means if SSEs are following the OECD model, what are the things excludes, storage, display, delivery, extra term. So now, what is that, delivery. Yes, these are all the things. Yes, these are all the things. These three things now we cannot be treated as what, P. Yes, understood. What is that extra thing they added in the P excludes in which model, OECD model. Sir, this is only we discussed. Yes, I accepted. This is only we discussed because in India we are following which model? UN model. Simple. While they are writing the, yes, the permanent establishment here, yes, they will exclude the permanent establishment, right? Includes they will write, excludes they will write. Here what are the things we can exclude? Only what, storage, display. Here what they will exclude? Storage, display, delivery. That is only the difference. They asked in this question, yes, state whether use of facility, storage, display, delivery, yes, is permanent establishment under OECD or UN model. Can you tell me here delivery is what? P only. In India, if you done delivery to that customer any good or services, that is treated as what ma? P. Which are excludes the storage or display. Sir, at any time they can ask again this question. Please remember. Understood? So now we have to discuss the last concept, foreign tax credit. I will tell you the foreign tax credit in an easy way. So, but you have to read that in your home at least once. So now shall we discuss FTC ma? Foreign tax credit is not given in the sections ma. Foreign tax credit related to rule only there. You have to read that rule. What is the rule number? 128. What is that? Rule number 128. Just listen carefully. $10 we can close it. Listen. Mom, in previous year 25-26, in which year 25-26, our Indian resident having the Indian income 10 crore and foreign income how much ma? 2 crore. In foreign country he paid tax on the 2 crore how much? 36 lakh. This is only we can call it as what? Foreign tax, right? Now in India in 25-26 how much income he earned? 10 crore he earned, but he has to pay the tax in India based on global income. But this 10 lakh Indian income, how much foreign income is there? 2 crore. But this 2 crore based on any provision, yes, 1 crore taxed in this year, 1 crore is going to tax in the what ma? Next year. Possible. Foreign income offer to tax in India in 1 year or more than 1 year? More than 1 year. Now can you tell me here 1 crore taxed? So totally what is the taxed amount? 11 crore. On that 11 crore, what is the tax? Just a random number I taken ma? 125. In next year, what is that Indian income you earned? Okay, 15 crore you earn, and foreign income which was pending to create tax in India, in that yes 1 crore here taxed. Here 1 crore we have to tax. Totally how much ma? Totally yes 16 crore. Random numbers only we taken. On that please calculate tax. Okay, just 145 lakh we got. But already you paid tax in how much? Foreign how much ma? 36 lakh. Now this 36 lakh you can take it as an credit in India. That is only credit method. Full credit, ordinary credit. Here full credit we are going to take. Resident country can give the credit for the taxes paid in the foreign country. How much tax you paid? 36 lakh. You can take 36 lakhs as an credit. But here, if 2 crores taxed in this year only, you can take 36 lakh credit directly. But here, the 2 crores is taxed proportionately, how much ma? 50%, 50%. Now, credit also, please calculate in that proportion only. Foreign tax credit can be allowed in the hands of whom? Indian resident. In the hands of whom? Indian resident. Sir, what is that amount you can get it as a credit? Whatever the tax you paid in the foreign country. Yes, ma. Understood? If that is doubly taxed. Yes, doubly taxed only. Here already taxed. Here it is going to tax. So that's why we are going to provide the what ma? Relief for the doubly taxed income. So now who is an eligible SSC for the FTC ma? Indian resident. Yes, year of credit, when you are going to take the credit, foreign income is offered to tax in India. Entire foreign income is taxed in India. Yes, you can take FTC fully. Remember, foreign income is what? Offered to tax in India. Next point, this is only I given as an example. If foreign income is offered to tax in India in multiple years, can you tell me that foreign income is offered to tax in India in our example multiple years, right? Now we apportion the FTC also in the same apportion. How that income is taxed? Can you tell me 50% income taxed in year 1, 50% income is taxed in year 2. Now FTC also we apportioned in that same proportion 50-50. Understood? Now very important, only for this point now I am telling the FTC concept, other than nothing is there. Now example, in foreign country, yes, we paid the 36 lakh tax. How much ma? 36 lakh. In India, yes ma, tax amount, yes, tax including surcharge plus what ma? Cess. Yes, 30 lakh only there. How much is there? 30 lakh. And penalty plus interest also we have to pay. That portion is 10 lakh is there. Can you tell me totally what is that we have to pay to department? 40 lakh. Yes ma, how much totally we have to pay ma? 40 lakh to the department. Now can I reduce the FTC? This FTC you can reduce only from the, yes, only from the tax portion. But how much tax you have? How much ma? 30 lakh. Now FTC also 30 lakh. FTC is not available for the interest fees penalty. It is available only to the income tax, surcharge and health and education cess. One question is there in our workbook and this is only 32. Yes, this is only I am taken as an example also, but numbers are different, you can take. Whatever the FTC is there, that FTC you can take the credit against the what ma? Income tax, surcharge, cess. But you can't take it against the penalty, fees as well as what ma? Interest. Penalty, fees as well as interest. Sir, if you want to take the credit, you have to submit some proof of payment of tax done in foreign country. Otherwise, there is no documents required, means you and me also can submit the what, I paid so and so country, so I paid in so and so country, so and so tax. But for getting this foreign tax credit, these are the documents are required to submit. For MCQ purpose, these are all the documents we have to submit to that Indian Income Tax Department in form number 67. Very important. If you want to enter into the practice, if doubly taxed income is there, already if any tax paid in the foreign country, in India you can take the credit. That proof of the payment of tax, whatever you done in the foreign countries, that all the details you have to submit in the form number 67 to whom? Indian Tax Department. Then only they can allow the what? FTC. So that's enough. And please do whatever we discussed in the class, that's enough. But you have to practice the different questions. But theory concepts are, these are enough. PE, models of DTA, FTC. Clear? Done. Every point I cover. Okay, sir. Yes, tomorrow we can meet with the tax planning. No, we can't claim 80 TTA, 80 TTB at a time. Any one only you can claim. If you claimed 80 TTB, automatically 80 TTA is not available. Because if you are a senior citizen on savings bank account interest, you can take 80 TTB only. Because in that 80 TTB, you will get 50,000. Okay. Then 80 TTA is automatically not available. You can't take both the sections at a time. Thank you.